How are you?
So they have admitted everyone, sir. So rest they will join. So we have close to 50 participants.
Okay.
So can we start, sir?
Madam?
Yeah, we can.
Okay, Silva. Silva?
So you can start, sir. You can start, please.
Oh, okay. Very respected today's speaker of this 6 days refresher course on IBC, CA Ravi Madam, and participants of this program. A very good morning to all of you. It gives me great privilege for me to welcome you all for this very, very important refresher course, and which is the emerging opportunities for chartered accountants. And this 6 days course will focus on examination point of view of IBC. I'm happy to welcome speaker of the day and coordinator of this refresher course, CA Ravi Madam, and each one of the participants for this excellent refresher course. The Insolvency and Bankruptcy Code was introduced with a view to bring together the bankruptcy laws under one structure, thereby establishing the Insolvency and Bankruptcy Board as the nodal agency to regulate all matters relating to insolvency and the bankruptcy, with the intent to complete insolvency resolution process in a fast and transparent manner, which will be benefit for the industries. And therefore, this 6 days course will be great useful to study IBC and successful in our insolvency examination. Today's speaker is one of the successful insolvency professional in Chennai, first time elected for this regional council for the term 2018 to 21. Now she is the treasurer of SIRC and chairperson of Insolvency and Bankruptcy Committee of SIRC, and she was the chairperson of SICAS of SIRC. She is the managing committee member of Hindustan Chamber of Commerce, and she was the managing committee member of Society of Auditors in Chennai. I'm sure she would make this day to have an insightful learning on some of the important points governing the topic of discussion, like the introduction of about the code and its examination process, and the important case studies relating to the corporate insolvency. The recommendation of insolvency professionals have given a new dimension to the financial discipline and transforming the banking and other financial sector to a very great extent. In this respect, the role of chartered accountants as a resolution professionals will be a great importance and a very significant to the industry. The motivation and inspiration sometimes comes from within, and many times from others appreciating us for our actions. We in SIRC are fortunate to have more of the latter, having been receiving constant support from our members for its initiatives, whether the programs are held in the early morning or in the evening, sometimes in odd hours. In this great occasion, I acknowledge and spontaneous and instant support received from our members, which I should admit our enthusiasm to present with the programs that create interest and involvement from our members. I am confident that this 1 week session will give and serve the purpose of giving our audience a broader dimension and overall perspective of the IBC and add value to the level of knowledge of our members. Once again, I have great pleasure to extend to all the participants a very warm and hearty welcome to this excellent program. Wish you all the best for this success of this program. Thank you so much for this great opportunity. Now over to Madam Ravi.
Yeah. Thank you very much, Chairman. Good morning, everyone. Good morning, Chairman. It's a great pleasure to actually address this gathering today as a faculty. Thanks a lot to the Chairman for supporting us in the IBC committee at SIRC level to do this program. As a refresher course for the exam. This is totally exam oriented. And apart from all the knowledge enhancement programs which we are doing at SIRC, we are also doing enabling programs for the members to take up the examinations. And these are all totally focused only towards clearing the examination, because for us to expand our practices, create new verticals within our practice, we need to acquire these specialized skills. Even though as chartered accountants, all of us have the basic skills and capabilities to carry on our professional engagements, even in all these niche areas. But due to the regulatory requirements, we need to definitely upskill ourselves by attending these courses, taking up the examinations and getting membership in the relevant bodies, so that, you know, we are able to carry on the profession within the expectations of the various stakeholders of that particular profession. So with this in regard, this particular program has been formulated. We have been conducting this for the past 2 years also at SIRC level and at the various branch levels. And the programs have been a great success, and we hope that we would be able to emulate whatever we have done in the past, and also what the other committees are also doing with reference to the examinations of the other requirements, like the DISA examination, then your concurrent audit, all these examinations which are being conducted by SIRC. So thank you very much, Chairman, for giving us this opportunity and helping us to do this program in a seamless manner. And 10 to 1 is a time which is convenient for everyone also. Even though it is continuously for 1 week, we thought, you know, if there is a break, the continuity within the course itself will be lost. So you have a intense session for 6 days. And the way we have covered it is every section, every regulation, every case law, every rule is covered in depth. Everyone has, all the faculties have great experience, and each one delivers it in their own style, but the style doesn't matter. It is what is going to be absorbed by the members and their taking up the examination. We have very eminent faculties from all over the country to take this particular session. So having, you know, giving you this brief introduction, I would like to go to the subject straight away. I will be doing it through a PPT, and the PPT will be shared with you later in the day. I'm sure that everyone here has this knowledge of the course. 1 minute, I just... Yeah. The knowledge of the course is something, awareness of the course will also be there with everyone, because the insolvency is the much talked about, you know, law, both in the media and outside by the professionals also. We all know how this insolvency law came in place. It had come on the back of the BLRC report, where, you know, this Narasimhan committee, then the CIRP repealing of the various acts. I'm not going too in depth into this, because this is something which everyone can read up on their own. But this law was brought to replace the various other laws for NPA resolution, and this law was effective in bringing the from debtor in possession. If you see all the other laws, whatever were there for the resolution of NPAs, was more of a scenario where the debtor was in possession. This is the law which was brought in to make the creditor in control. So what happens once insolvency process is initiated on a corporate debtor, or the individual or whomsoever, it is in this case only the creditor who is in control. Creditor in the sense, it is the financial creditors, whoever has lent money. This is a very simple way in which I'm putting it. You will see the nuances as we go on. So the entire thing is from debtor in possession, the creditor gets control of the entire ecosystem of insolvency. So what was happening earlier was the borrowers lent the funds to the clients, and the lenders with them, the borrowers borrowed from the lenders, and the lenders then, once the money was disbursed, what happened was the lenders were at the mercy of the borrowers. And even in case of a default, the lenders, even though they had various forums in which they could approach to recover the monies, you know how the judicial systems worked. It was a very totally long drawn out process, and it was extremely difficult for the lenders to recover money. So this, as per the recommendations of the BLRC, the IBC was brought in to make this entire, to bring in changes such that, one, it is a time-bound mechanism. The control moves to the creditor, and one of the other major changes which was brought in by IBC was the government dues moved down to the bottom in the waterfall mechanism. Waterfall mechanism is what was actually talked of by the BLRC report. Normally, in the earlier systems of recovery, the government dues were not at the bottom, but if it comes to, once it came into IBC, the government dues came at the bottom of the pyramid. Yeah. So moving on, I'm not going to give more of an introduction. I will now talk about the examination, how it is structured. This examination as a whole, IBC has 255 sections, and you have the rules as well as the regulations. We all know, as professionals, we all know that every act will have a rule and a regulation. And so the code is 10 marks and the rules and regulations is 15 marks. The earlier examinations, the weightage of marks was very different. But now if you see, as the code is maturing, as the entire process is maturing, the examination process, content has also been, is also undergoing various iterations within the code. So where earlier it was 15, 25 and other marks, now IBC code has 10 marks, rules and regulations has 15. Your case laws where, because jurisprudence is evolving in this particular code. So the case laws is 10 marks, where you have the Supreme Court, High Court, NCLAT and NCLT, where you have 5 questions of 2 marks each. And there are 17 case laws in Supreme Court, High Court and NCLT, and 9 case laws in the NCLAT. You have to definitely, we have arranged for a special session on case laws to be taken by the very eminent advocate Ashish Makija, who's a pro at this, and he has been addressing at various forums with respect to the case laws, especially those pertaining to the examinations. He would be able to walk you through it so well that you will, I think once you attend the session, you will be very easily be able to take up the examination. Then you have this, you must be wondering why there's why there is only 10 marks and 15 marks here. This is where you're going to get, the knowledge of the code and the rules and regulations is going to be tested on this case studies on CIRP and liquidation, and here again on the individual insolvency resolution and bankruptcy, and on the insolvency of companies, firms and LLP. Companies, firms and LLPs have still not been notified, but in spite of that, they are going to ask you questions on that. And apart from that, you have case study on business and professional ethics. Professional ethics is something which is being placed a lot of importance on by the regulator IBBI and through the triple IPs, that is the Indian Institute of Insolvency Professionals, the IPAs of the various professional institutes of ICAI, ICMAI and ICSI. They are allowed to take action against insolvency professionals whomsoever are registered with them if the professional ethics as envisaged by IBBI, as envisaged by the code, is not being complied with by the professionals. So please understand, this is going to play a very, very impactful role when you are going to practice as a insolvency professional. Then you have the Companies Act, the LLP Act, and the Partnership Act. I haven't, the sections I mentioned in the syllabus, please go through it. Then you have your Contract Act, Negotiable Instruments Act, Transfer Property Act, CPC, PMLA, RDBA, Arbitration and Conciliation, MSME, RERA, SCRA, and SEBI. Please understand, SEBI, Companies Act are going to play a very, very vast role during your practice also. Apart from all these Contract Act, we need to have a basic knowledge of it, your CPC, your PMLA, your RTB, or it is an interplay of various acts, along with the important, the IBC code. If you see SEBI, they have all recently, last week also, there was a circular issued both by NSE and BSE on the impact. What are the filings which are required by the insolvency professionals for the purposes of complying with the LODR. If you see LODR Schedule 3, there is one new insertion which came in 2018, which gave a detailed list of what are all the filings and disclosures which are needed to be done by an RP for the corporate debtor who is undergoing insolvency, who is listed under SEBI. So these are very, very important. The LODR is very important from a day-to-day perspective as practicing professionals. Apart from that, you have the finance and accounts and corporate finance, where your general knowledge of, your ratios and other liquidity management, your GST, your income tax, all this is tested, but it's only for 5 marks. And then you have a general awareness of 5 marks. So before I go through, start off the topic, I just want to tell you, this paper is definitely a little tough to get through, mainly because you have the negative marking. So in order to not get what do I say, get misdirected into attempting all the questions, since there are negative marks, what you should do is, when you go into the examination hall, you will be given only one sheet of paper and a pen. You cannot take anything else into the examination hall, and as usual, all other things would be blocked. You will be able to look only at the questions and answer once you log in. So utilize this paper very, very intelligently. What you do, you put 3 columns in your paper. You write out, mark it out as what you know, the questions for which you know the answers, questions for which the answer is doubtful, and questions for which you don't know the answer. So you start answering the questions. Once you go through the questions, as you start, clicking on the correct answer, you fill up the numbers in the paper which you have. So when you go back, once you've completed, see, normally you should be able to complete this examination in a matter of, I would say, 1 hour or 1.5 hours, max. You will, because the more time you spend on it, the more you're going to get doubts. So you mark the questions for which you know the answers, what you have doubts and what you don't have. Do not touch the questions for which you don't know the answer, because the moment you make a wrong answer, you're going to lose 0.25 or 0.5 marks accordingly. So do not touch any question for which you don't know the answer, because the amount of marks which you're losing is 1.25 and not 1 mark. Okay, your wrong answer gets a negative valuation of 0.25 marks. Then whatever you have a doubt, because you always, all of us now know how these online examinations work. So, you can go back and review the answers. When you're reviewing the answers, review what you are doubtful about. So once you review it, if you don't know, if you feel your answer is wrong, don't answer that question, because we come across many people who are clearing the exam at say 57.5, 58.5, 58, which is bad. I mean, you want to clear the examination and your pass mark is 60. So it is better that you answer it intelligently, make a strategy for yourself. And there are a lot of online question banks which are available. Time yourself, try to take up those examinations, time yourself, try to follow this methodology. So you will be able to go there and replicate whatever you have practiced. And since like I told you, you have only 10 direct marks and 15 direct marks for the rules and regulations and the code, whereas you have 20 marks on case study. So unless you are thorough with this code and rules and regulations, this 20 marks, this 8 marks, this 6 and this 6 is not going to be easy to get. So you have to definitely be very thorough with the code, rules and regulations and the corresponding dates, the timelines and the methods of whatever is envisaged within the code. These case studies are going to be extremely difficult to answer. But given the fact that if you're going to be thorough with this, these would be extremely easy, and you can get full 28, 6 and 6 on these. And the case laws also, it is quite easy to actually get your appropriate marks on these case laws also, because there are only very limited number of cases which are prescribed for the examination. So we will move on to this. Sorry, the audio is not clear. Selva, is the audio clear? Okay, fine. I've got a reply saying it is very clear. Okay, fine. So we will move on now. See, what I will be covering today is the CIRP process. CIRP is one of the major section, I would say the parts of the code. The code, this is in part 2 of the IBC code. Part 1 is the preliminary and all that, which I will cover now. This is part 2 of the code, which deals with the insolvency resolution and liquidation for corporate persons. I will not be covering liquidation today. Liquidation will be taken tomorrow by another faculty. Today, I will be covering part 1, the preliminary, and chapter 1 and chapter 2 of part 2 of the code, which is the corporate insolvency resolution process. Now, you can always, I know all of us being professionals, we will always know how we are going to read any particular act or code. So the first part, if you run this through, what will happen is you will have to know who is the person who can initiate this. See, the CIRP is always, what is a corporate insolvency resolution process? The code defines which is the corporate on which an action under corporate insolvency can be taken place. So it tells you who's the person, and then how the process can be initiated, and then who are the different people who can initiate. One, on whom you can initiate. 2, who can initiate, and what is the process. Once it is initiated, how it gets admitted in the NCLT. NCLT is the forum where a corporate adjudicating authority, where the corporate insolvency process is going to be admitted. And when I told you about BLRC's thing also, what I said was it is a time-bound manner. Earlier, whatever was the mechanisms for recovery or of defaults, it was not time bound, because judicial processes in our country, as rather unfortunately, are very prolonged. But the code was envisaged to complete it in a time bound manner. So you will have the time limit for the CIRP, and also having initiated an insolvency process, how it can be withdrawn. Then once the process is admitted, once the corporate is admitted within the insolvency ecosystem, what happens? It gets a moratorium. Moratorium was called as the calm period in BLRC. And then once it is admitted, the parallelly along with the moratorium, the insolvency professional, who is going to be us, is also appointed. Once the CIRP is admitted for the corporate and the RP is also appointed, he takes over. And then the RP is, it is relentless. The process, it's very time bound. There is a timeline which is given under regulation 40A, and under any circumstance whatsoever, you cannot ignore the timeline. You cannot delay any of the processes. As resolution professionals, we are bound by the timeline, and in case we are unable to keep up with the timeline, either we get it ratified by the board, IPA, or by the NCLT, have our records in place to actually substantiate our not keeping up with the timeline. So once you do that, you do the public announcement, say calling for claims, and after the claims have come in, you collate the claims. And you you will have two things here. One is as an interim resolution professional, and then as a resolution professional. So the interim resolution professional will make a public announcement, call for the claims, collate the claims, and create the committee of creditors. Form the committee of creditors. The committee of creditors first meeting, they will appoint the resolution professional, and then the resolution professional will have the various duties, and he has to manage the affairs of the CD as a going concern. And the RP has to conduct the corporate insolvency process. He has to conduct the meeting of the committee of creditors, and he has to apply for avoidance of transactions, and he has to get the approval of the committee of creditors for certain actions. And I also told you that the purpose of this code is to ensure that the CD is to a maximum extent continuing as a going concern. It is the responsibility of the RP to do that. So for that, to meet that basic premise that you want to continue the business of the CD as a going concern, what you have to do, you have to prepare an information memorandum. Information memorandum is nothing but a document which contains the static information pertaining to the corporate debtor, which will be useful for a dissemination of information to the prospective. See, this company has been admitted into insolvency by the adjudicating authority, and as per the tenets of the code, we are supposed to continue it as a going concern. So since the promoters were unable to carry on the business as a going concern, this company CD has moved into insolvency. The code does give an opportunity for the promoters to get back into this corporate, but there are a lot of disqualifications under section 29A, which if they come under those disqualifications, they do not get a backdoor entry to back into the corporate. So the resolution professional will call for resolution plans. That is, he'll call for other plans from other corporates who can take over this company. So for that, he has to give the information memorandum, and then they'll have to prepare an evaluation matrix, collate all the resolution plans, see which is the most one which meets the evaluation matrix, present it to the COC, and the COC will approve the resolution applicant, and then present it to the, give the approved plan, file the approved plan with the adjudicating authority, get the approval of the adjudicating authority, and the CIRP is over. Now, if the resolution plan does not go through, and what happens is it fails or it gets rejected, the company moves into liquidation. So this is the entire process of the CIRP. So now we will go into sections, the relevant sections. Okay, fine. The audio is clear. Okay, so now we will come to, this is part 2, like I told you. Part 1 is the preliminary, part 2 is the corporate insolvency resolution process. In part 2, I'm going to deal with chapter 2 along with the corresponding rules and regulations. Because I feel that if you are going through any section, it's easier to understand and make sense and recall if we read the corresponding regulations also. So this part 2 covers what is the CIRP, what is the broad process flow, and other things. So what is the corporate insolvency resolution? I told you what it is. One is you file the application, get the application admitted, appoint the interim resolution professional, form the COC, Then after the COC is formed, see if you see here, this is the interim resolution professional. Once the COC is formed, he confirms his resolution professional, or the COC may replace the interim resolution professional and appoint another resolution professional. And after that, the resolution professional will prepare and approve the resolution plan. So this is the entire process flow which we are going to see now. So what we have to see is, first is there is a default. We'll see what are the definitions. If there is a default, that is a default of whatever is the amount which is due to the creditor, then the creditor will apply to the NCLT. NCLT may admit or reject this application. If they are going to reject the application, the deficiencies you'll be given time to rectify the deficiencies in your application and resubmit the application again. And after that, it may again be outright rejected or outright admitted. So once the application is admitted, then your insolvency process commences, admission and commencement. So once it is commenced, what happens is, this is the these two are the two legs of this admission. One is the day that your application is admitted, moratorium is declared. I told you the calm period, and also the interim resolution professional is appointed. This interim resolution professional has to make a public announcement, and then after the public announcement, we will see what are the activities which are to be carried out. And after carrying out all those activities, the IRP has to form the COC. After the COC is formed, he has to conduct the first meeting of the committee of creditors. So what happens in the first meeting? The first thing which the agenda which is of the COC first meeting is approval and appointment of the resolution professional. So this may be either the same IRP or another different RP. So an RP is appointed here. Then what does this resolution professional do? He manages the affairs of the CD, prepares the IM, that is the information memorandum. The resolution plan he has to approve, prepare and approve. He calls for RFRP will be given, and he will go through all the resolution plans, present it to the COC, it gets approved by the COC, and whatever is the plan which is approved by the COC is submitted to the NCLT, and based on this decision of this adjudicating authority here, the consequences are there. Either it gets resolved or it goes into liquidation. This is the basic process flow of the CIRP process. So we'll now go into the actual code, actual sections of the code. So here you saw application to NCLT. So before application to NCLT, there must be a specification as to who can initiate. There are two legs to this. One is who can initiate the process, and two, against whom can it be initiated. So the process CIRP can be initiated by the financial creditor, operational creditor, or the corporate debtor. Sorry, I didn't make the change here. It's a corporate debtor. So what is the basic criteria for a process to be initiated? The basic criteria is for the process is there should be a default. What is the meaning of a default? Default means non-payment of debt. What is it? Non-payment of debt when whole or any part or installment of the amount of debt has become due and payable and is not paid by the debtor or the corporate debtor, as the case may be. So section 312 defines what is a default. 311 will define what is a due. So a default as it is the non-payment of the debt. Okay, 311 will define what is a debt. It will define non-payment of a debt, whether when whole or any part of it becomes due and the CD has not paid it. So what are the fundamentals of this default? One is there should be a debt, and a whole or a part, whole or installment of the debt should have become due and payable, and it has not been paid. Non-payment of such debt or part of that installment thereof should not have been paid by the corporate debtor. So what is the trigger? What is the threshold for which, this particular CIRP can be triggered? We all know that there has been a lot of talk about this in the media, among our professional fraternity. Earlier, the minimum amount of the default was 1 lakh, and there was powers given to the central government to notify a higher value, which should not be more than 10 crores. And now this notification came on 24th March 2020, where the minimum amount of default is 1 crore. And we all know that the new PPIRP has come in, where the minimum default is 10 lakhs for the MSME. But we are not covering PPIRP during this 6 days, because it is not a part of the examination syllabus now. If you can go through it for your own interest. So against whom can this CIRP be initiated? This is in section 2. So it can be initiated against a corporate person who will, henceforth, I will be talking about that particular corporate person as a corporate debtor, who means a corporate person who owes a debt to any person. It can be, the corporate debtor can be a company, an LLP, or any other person incorporated for under any law for the time being in force. So CIRP, you should remember, is only for a company, LLP, or any person incorporated under any other law, and any other company governed by any special act for the time being in force, except insofar as the said provisions are inconsistent with the said act. And they can never be a financial service provider who operates under the authority of a financial sector regulator, as such as RBI, SEBI, IRDA, or others. So whom can it be initiated against? Personal guarantors, partnership firms and proprietorship firms, individuals and other persons. So here it is a corporate debtor, and here personal guarantors, this has already been notified, and you will see that then I think in another 2 days we will be covering individuals and partnerships, and this will also be covered then. And then partnerships and proprietorship firms and individuals and other than persons referred to here, the personal guarantors. These two have not yet been notified. So the rules and regulations are not applicable to us right now. They have not been notified, but the code is applicable. And we also have a case study on these topics. So you have to be very thorough even with the sections under these chapters. So let us go to the key definitions. So you have a claim. Because what happens is when we undertake these processes, I already told you, when the resolution professional is appointed, he makes a public announcement calling for claim. So you need to know what is a claim, because once the CD is admitted into the CIR process, there will be many people who are going to make claims to the resolution professional, saying that this is the amount which is due to me from the corporate, and it is up to the resolution professional to admit and try to settle these people. So what is a claim? Claim is a right to payment, whether or not such right is reduced to judgment, fixed, disputed, undisputed, legal, equitable, secured, or unsecured. So basically it is a right to payment. And 2, it is a right to remedy for breach of contract under any law for the time being in force. Again, if such breach is going to give rise to a right to payment, whether or not such right is reduced to these same things: judgment, fixed, disputed, undisputed, legal, equitable, secured, or unsecured. See, this is where, I always say that insolvency professional as such, IBC, insolvency, this entire code is opening up so many opportunities to us as chartered accountants. Okay, you need not necessarily have done this course because you need a minimum of 10 years of experience. So if you are falling in the below 10 years category, these are all places where you can give your advisory. And these are all, sections under which we can advise our clients as chartered accountants and tell them whether your, vendors are going to default on your payment, or if you default on your payment, what is the impact on these defaults? What are all the remedies which we can take to ensure that our client is not going to have any incipient insolvency or some incipient claim which is going to pull them into insolvency. So this is a right to payment or right of remedy for breach of contract. I have, to a certain extent, I have tried to cover the case laws also. These are the two case laws which, these two cases will come under many sections. I have tried initially, but then due to paucity of time, I have not completed it. I'm not going to cover this because all this will be covered by the by Advocate Ashish Makija on Saturday. So we know now what is a claim. Next, who is a corporate debtor? I told you the person whomsoever is going to undergo or against whom the case is going to be admitted is no longer going to be called as a company, is going to be called as a corporate debtor. He is a corporate person who owes a debt to any other person. It can be a company LLP. We have seen this. Now, who is a creditor? The creditor is the person who is going to initiate the CIRP against the corporate debtor. So any person to whom a debt is owed, and it includes a financial creditor or the FC. These are all terminologies which are going to be constantly used by us the day you decide to take up this examination and clear it and join the profession. The FC, the OC, who is a secured creditor, who is an unsecured creditor, and a decree holder. These are the people who are going to actually initiate the process. And these are the people who are going to come under section 53 in the waterfall mechanism. How are you going to repay these people? How is the liquidation estate going to repay these people? So you have to understand these people who are the main people in the CIRP process. Now, this we have, we know now who's a creditor. How the creditor is going to initiate a CIRP process, make an application to the NCLT only based on the default. And what is the default? Default is non-payment of a debt. Okay, we already saw what is a default in a previous slide. It is under section 312, which is non-payment of debt in whole or in part when it becomes due and payable. And it is not paid by the corporate debtor. What is a debt? Debt is a liability or obligation in respect of a claim which is due from a person, and it includes a financial debt and an operational debt. Sorry for this typo. So debt is a liability or an obligation in respect of a claim which is due from a person, and here are the operative words: financial debt and operational debt. Now here in this previous thing we saw financial creditor, operation creditor, and secured, unsecured, and all that. Here you see it includes a financial and operational debt. So these are all interlinked, and our understanding in all this would be not only in terms of the code. You should understand all these claims and the timing and all this based on the Limitation Act, the Contract Act. Then you have your Transfer of Property Act. All these acts are now going to play a role. So like I told you, it is an interplay of various acts, even though the code as per section 238 will supersede all these acts. But our understanding, if you see for limitation, how is the Limitation Act going to come into play when you are considering a debt or default? So all these we have to say. So that is why now, as chartered accountants, when you go and advise your clients, ensure that this confirmation from debtors is obtained. It goes a very long way now when this insolvency is coming out. It's coming up in leaps and bounds, and the coverage is also increasing. The base of corporates and the base of LLPs which are covered, it is being increased. So we have to ensure that apart from following all the basic pronouncements of company law, of the institute and other things, ensure that you also keep in mind, now that we are gaining knowledge on this act, we also have to tell them what is going to be the implication for taking a balance confirmation. A balance confirmation, earlier we used to say, okay, fine, they have not come, we have sent the letters. Our responsibility does not end there. Our responsibility extends to the extent of telling our clients, we are not responsible for this. You better take a balance confirmation, because tomorrow, if this confirmation is there, one, your limitation doesn't come into play, and two is also, after some time you will see about the establishment of a dispute. In all these cases, what happens, once you get a balance confirmation, both for a financial and an operational debt, it goes a long way in making yourself prepared for this insolvency scenario. So jurisprudence for debt and default, please go through these cases. Next, you have a corporate guarantor, which is now being brought into the CIR process. It means a corporate person who is the surety in a contract of guarantee to a corporate debtor. And again, there is a lot of jurisprudence here also, which says what happens, to what extent is this, corporate guarantor, the applications against corporate guarantors, it has to be combined with that of the CIRP, and how 62 talks about the corporate guarantors and the personal guarantors also. So now, all this is, I spoke to you also about balance confirmation and dispute. So what is a dispute under section 5.6? Dispute includes a suit or arbitration proceeding relating to the existence of the amount of debt, the quality of the goods or services, or the breach of a representation or warranty. So as again here, you have a fair understanding of this, and tell your clients, in case you are withholding payment for a particular vendor, do so because of some difference of opinion about the quality of the goods or services, establish records for the same. If you do not establish records for the same, then what happens? Your vendor can definitely initiate a CIRP against your client. So the jurisprudence for this I have included here. Now you come to who is a financial creditor. We saw that the CIRP can be initiated by the financial creditor and the operational creditor or the corporate debtor himself. So who is a financial creditor? Financial creditor is one to whom the financial debt is owed or it is assigned. So it is not necessary it should have been initiated from that person. He can also take an assignment of the financial debt. This becomes very crucial when you come across cross-border transactions. I had an advisory case where it was an Indian company who had formed a company in Singapore to supply some goods to a company in India, and this company in India was defaulting on the payments. And since cross-border insolvency has not yet been implemented, what is going to happen? So I had an advisory for such a case. So we have to understand that person to whom a financial debt is assigned is also a financial creditor. So the jurisprudence, I'm not covering that. So what is a financial debt? Here again, you also have to understand the Contract Act, where there is a time value of money. One, it is money borrowed against interest. B, any amount raised by acceptance or under any acceptance credit facility or its dematerialized equivalent. Then any amount raised by pursuant to any note purchase facility or the issue of bonds, notes, debentures, loan stock, or any similar instrument. Amount of any liability in respect of any lease or hire purchase. So this is also brought into under the definition of financial debt. And the definition is as per the Indian accounting standards. So we have to understand what is a finance lease or a capital lease as per the accounting standards also. Then receivables sold or discounted other than any receivable sold on non-recourse basis. Any amount raised under any other transaction, including all these forward sales and purchase agreements having commercial effect of a borrowing. And any amount raised from an allotee. This is a, very new thing which came based on the Pioneer urban infrastructure case. If you go through it, you will understand. Any amount raised from an allotee under a real estate project. This real estate project was these builders were not have been collecting funds from the allottees of housing projects, but they've not completed it and delivered it. So any amount raised from an allotee was also considered as a financial borrowings. It was deemed to have the effect of a commercial effect of a borrowing. Of course, now subsequently an amendment came that you need to have 100 allottees to raise to make a application. But unfortunately, what has happened is because of this, a number of this amendment which brought in 100 minimum of 100 allottees. Recently, very recently, around 2 weeks back, I read of a judgment which said that any applications which had been filed could have been dealt with. So the courts are also giving very contradictory judgments. So what is the allottee and a real estate project? It will have the meaning assigned to it under 2D and ZN of the real estate thing, RERA. The RERA, you have to be, again, if you see, RERA is also one of the acts which are there in the syllabus. Then any derivative transaction entered into in connection with protection or benefit of or benefit from fluctuation in any rate or price, and calculating the value of any derivative transactions. And then counter indemnity obligation in respect of guarantee, indemnity, bond, documentary, LC, or any other instrument issued by a bank or a financial institution, and the amount of any liability in respect of any guarantee or indemnity. Okay, so this is the financial debt. When you will come across different situations, you have to take your decisions on a case basis, and you have to prepare along with your advocate when you are sitting and filing the application. Of course, you will be going there only as a resolution professional, but in case you do get an advisory situation as to whether an application is going to be filed, you have to take into account the various definitions under the code along with all the other acts also. So now comes the initiation date and insolvency commencement date. Initiation date is the date on which you apply to the adjudicating authority. Make your application to the adjudicating authority. And this application is, as usual, going to be made by the corporate applicant, financial creditor, or the operational creditor. Okay, corporate applicant will be the section 10, this is section 7, and this is section 9. Acceptance, this is the, you file the application. Once the application is admitted by the adjudicating authority, then the date on which the application is admitted is called as the insolvency commencement date. This date is very important under the ICD. The insolvency commencement date is extremely important because everything starts together on this date. The entire process, your 180 days, everything is computed from the insolvency commencement date. Interim finance is something which the the resolution professional will arrange to run the company during the CIR process as a going concern, and it is also taken as a part of the insolvency process cost. So what is the insolvency process cost? This is one, profession which guarantees the fees of the professional who is going to run the show. So we should be very glad, because normally as professionals, we once our work is completed, we have to, follow up with our clients to get our fees. But this is one profession which guarantees the fees, because one, you have your interim finance and related costs, fees payable to a resolution professional. Okay, whatever is the fees which is due to you, it will definitely come back to you either during the CIR process or in the waterfall liquidation. Whatever is the amount which is owed to the resolution professional will first have to be repaid before the payment to the other people. Then cost for running the business of the corporate debtor incurred by the RP. So you are supposed to run the CD as a going concern. Whatever is the cost which you incur for running the business, that is also a part of the insolvency resolution process cost. Costs incurred by government for insolvency resolution process, and other costs which are specified by the board. We have to understand this insolvency resolution process cost, because this is the cost which is going to be first reimbursed, if not during the CIR process, at the liquidation process, at the time of distribution, in case, initially from the liquidation estate, if it is not going to be repaid, at the time of the final distribution whatsoever, the cost this is only going to be the first amount which will be distributed. Now we know that who is a financial creditor, what is a financial debt. We saw operational creditor can also initiate the CIR process. Operational creditor will initiate the CIR process only based on the operational debt. What is an operational debt? It is claims regarding provision of goods goods or services and includes employment. When you go through the Swiss ribbons case, you will see that there were so many pronouncements which have been made in that case. So many sections you can quote the case for many sections. So it will be quoted here also. For the employee dues, Swiss ribbons case has made a pronouncement. Debt regarding payment of dues under any law, that is also an operational debt. Amount payable to any central government, state government, or any local authority, that is also an operational debt. So it does not mean only claims regarding to provision of goods or service. Employees are also considered as operational debt. Any due against under any other law or under any central or state government, that is any statutory payment. Now, who is a resolution applicant? I told you that the resolution professional will call for resolution application. So a resolution plan, sorry. And that resolution plan will be made by a resolution applicant. It means a person who individually or jointly with any other person submits a resolution plan to the resolution professional pursuant to an invitation made under clause H of 25(2). So this section will find mention in another place also. So please remember this. When we come to section 25, we'll see what is the subsection where the resolution professional, it is his duty to invite, to make the RFRP call for resolution plans. He has to call for resolution plans under section 25(2)(h). He makes an invitation to a resolution applicant to submit a resolution plan for the corporate debtor, for the purposes of which the resolution professional will share the information memorandum to the resolution applicant. So what is a resolution plan? Resolution plan is the plan which is proposed by the resolution applicant for the insolvency of the corporate debtor, insolvency resolution of the corporate debtor. And resolution professional is us, who is appointed to conduct the insolvency resolution process and includes the interim resolution professional also. Oh, okay. I will, sorry, I will try to go a little slower. So now we will come to, I already told you who can initiate the corporate insolvency process. It can be done by a financial creditor, it can be done by an operational creditor, or it can be done by the corporate applicant themselves, the company itself. So what happens now, we will see how it is going to be initiated by the financial creditor. So financial creditor, operation creditor, I'm sorry, this is the corporate debtor, not the financial debtor himself. I haven't made the change. So it will be by the financial creditor. Who is a financial creditor? Financial creditor is the person, we already saw, person to whom the financial debt is owed or to whom the financial debt is assigned. So if there is a person who's got a financial debt to whom the corporate debtor owes some money, that person can assign the debt to some other person, and that person will in turn become the financial creditor of the corporate debtor. So what is a financial debt? We already saw what is a financial debt. So I am not going to go through this again. So this process, this entire process flow which we saw there, will come into place now for each individual application initiated by the financial creditor, operational creditor, or the CD himself, has the same process which will be followed. So you have to assume that there is a default, and for this recovery of this default, the financial creditor is going to initiate an application. Now, this is the meat of the entire code. One is the first step, you are filing an application. This application is going to be filed now by the financial creditor. You should be very clear. If somebody taps you and wakes you up, you should tell section 7 is application initiated by the financial creditor, section 9 is initiated by operational creditor, and section 10 is by the CD himself. Okay, so section 7 is application initiated by the financial creditor. Who can do it? Either by the person, the lender singly, or jointly with other. Yeah, somebody has raised their hand. Yes, sir. Okay. So it can be done singly or jointly with other financial creditors or any other person on behalf of the financial creditor as may be notified by the central government. So there is, again, as usual, we are very familiar, there will be provisos and explanations. Proviso 1 says that a financial creditor, as in section 21(6)(a). Yeah, Mr. Prasad. You have any query? Can you type it? Or okay, if you can type it, or we will take it up towards the end. So 21(6)(a), 6A, A and B is where there are authorized representatives who will be appointed for in case of certain debts, like your you have the fixed deposit holders or people who have made deposits with companies. It can be done only by 100 such people. Like I told you, for the allottees under a real estate project also, a minimum of 100 allottees have only got to get together to file an application. Similarly, if there are any authorized representatives who are going to represent any creditors, in those cases also, the proviso is that only if 100 such people get together can they make a application as a financial creditor. Now, suppose there is a real estate project against a huge builder, and he has defaulted on delivery of the apartments or whatever it is, of delivery of the project. In those cases, 100 allottees have to get together and file an application. If there is a default for one person, it cannot be done. This particular amendment was gotten to ensure that frivolous applications are not made. So they brought in these numbers here. 100 people, minimum of 100 people have to get together. So the condition is, so we know who is the financial creditor who can file the application. Condition is, as usual, a default should have occurred, and the default is of the applicant, financial creditor, or any other financial creditor. So when they are making the application, what should they give? They should it should be accompanied by, 1 is the proof of debt and 2 is the proof of default also. And here, this is a mandatory. All these are mandatory. Name of the insolvency professional, resolution professional should definitely be given along with that application form. And in case there is a confirmation of default from an information utility or any other evidence to confirm the default, the AA will admit the application. Okay, fine. Yeah, I would try not to be distracted by hand raise. Thank you very much for that. Yeah. So So what is it? Like I told you in the beginning itself, what will happen in case there is a default and you want to initiate this insolvency? The financial creditor will submit an application to NCLT. So suppose you are empaneled with a bank, you will be asked to sign there as an insolvency professional. The bank, suppose it is a bank, they will prepare the application and they will submit it to the NCLT. NCLT in this case is the adjudicating authority. And what is the location where the registered office of the corporate debtor is situated? That is the adjudicating authority who's going to have jurisdiction over the particular case. Now, what does the NCLT do? Reviews the application and confirms the default. How does it confirm the default? From an information utility or by any other evidence which will be provided by this person who is filing. If the application is okay, if it is complete in all respects, then the adjudicating authority will pass the orders for admission. In case there is any deficiency in the application, the NCLT will reject the application and ask the applicant to rectify it within 7 days. Okay, now what are the rules? Now here, this is the procedure. What are the rules? Applications should be given in Form 1. The financial creditor has to make the application in Form 1 and propose. This is a mandatory requirement. The financial creditor has to compulsorily propose a resolution professional in Form 2. Then after doing this, what does he do? He prepares the form and before he files it with the adjudicating authority, he has to send copy of the application is to be served to the registered office of the CD and the board. The board here means the IBBI. And friends, since this is your first class, my assumption is you are all just preparing. You may have some idea, but the board, the regulatory authority, wields a lot of power, and there is a lot of compliances which we as professionals need to make, and there is no way in which you can deviate from these compliances. So this was a new requirement which came in the amendment. You have to definitely send the application to the board before you file it with the adjudicating authority. In case of joint applicants, that is joint financial creditors, or 2 or 3 financial creditors are getting together to file an application, one nominee shall be identified from amongst the financial creditors. Okay, and we saw about assignment of the financial debt. In case there is an assignment of a debt or there is a transferred debt, the instrument of assignment or transfer should also be attached along with the application in form number 1. What is the application format? Here you have Rule 4 and Rule 10. Here, the financial creditor can either by itself or jointly with 2 or 3 of them can get together and file against the corporate debtor. In case it is bulky, because the agreements which are entered into with the financial institutions will be huge, and there may be a lot of facilities which have been availed of by the CD, so they can provide bulky backups in soft copy. And Rule 4 says application to be made in Form 1 with the fees of rupees 25,000. Please, these are not frivolous points which I'm including here. Every single point which is there in this PPT is a question likelihood. You have to understand. They will say, what is the fees which has to be paid for an application under Rule 7, under Section 7, under Section 8, under Section 9, under Section 10. You have to be very clear. 25,000, 2,000, what is the amount? What is the amount pertaining to each rule? So every single word, people who write the DISA or CISA exam and multiple choice questions will understand every single is, add, dot, p, everything will have a meaning and which is a question point. So kindly go through every single point which is there in this PPT. Try to highlight it in your copy of your Bare Act or the book, whatever you have. We use the books published by the commercial law publishers. You can take anything or you can go to the website also and download the Act and the rules and regulations. But just when you're downloading, please understand what is your syllabus. Your syllabus is only up to 31/12/2020. Do not download anything after 31st December 2020, because this is a very dynamic law and there are always a lot of changes. Only restrict yourself to the Act, rules and regulations up to 31/12/2020. So how can an insolvency professional be appointed as IRP? So here, this is what we are now concerned with, because you need to get appointed. When a financial creditor is filing an application with the NCLT, with the adjudicating authority, he definitely has got to propose the name of the professional, insolvency professional, who is going to act as an interim resolution professional. Please understand, when the first application is filed, you're not going to be a resolution professional, you're only going to be appointed as the interim resolution professional in Form 2, which you have to sign and give. And the latest requirement is, once you sign and give, you also have to upload the details on the website. So there will be two things which we come across now. There is one Form 2, which the resolution professional will sign. And there is also a Form AA, which will be signed. So please understand, I've just included it here since I've talked about Form 2. Form 2 is in the rules. Okay. And this Form 2 will be filed, signed and given by the IRP at the time of filing of the application. So this is a written communication by the proposed IRP. Form AA, you will again come across as we go down the further slides. It is specified in regulations under Regulation 3(1)A, and this is a written consent to act as a resolution professional under Section 22(3)A or 3B. Now, this Section 22(3)A or 3B will come after the first COC. I told you in the first COC, the agenda would be to confirm the appointment of the resolution professionals. So they will continue with the acting IRP, that is the interim resolution professional, or they will replace. So this Section 22(3)A and 3B is that. So at that point in time, the COC will get the Form AA from the resolution professional. But if it is at the time of filing the application under Rule 9, the applicant, okay, either the financial creditor or the CD themselves, they have to, or the OC, it is not mandatory, it is a choice. They will get the sign from the IRP in Form 2. So what are the grounds? We said that the NCLT can either accept and admit the application, or they will reject and give the applicant a time limit for rectifying the deficiencies. What are the grounds? Disciplinary proceeding against the resolution professional. So the FC is going to take Form 2. We saw he's taking Form 2 and he is submitting the application to the adjudicating authority. What does the adjudicating authority do? Adjudicating authority will check from the board whether there is any disciplinary proceeding against the proposed resolution professional. In case there is a disciplinary proceeding against the resolution professional, then the adjudicating authority will reject the application. That is the first ground. The second ground is the application is incomplete. In case there is an incomplete application, it will be rejected and the applicant will be asked to rectify the deficiencies. Or if the default itself cannot be established. See, for an application to be made, first there should be a default, and there should be, we already saw here that there should be a proof. Proof of the default also should be accompanying the application. So if that default cannot be established, then again the application will be rejected by the NCLT. So now we will come. So all this is now the financial creditor. Financial creditor has filed the application and the application will be admitted or rejected. Even if it is rejected, the deficiencies will be rectified. The applicant will be given an opportunity to rectify and then it will be accepted again. Now, you come to the application which has to be filed by the operational creditor. Operational creditor, you have two sections which operate here, section 8 and section 9. So we'll see why there are two sections, whereas for financial creditor, it is only one section, section 7. What is you have to again understand what is an operational debt. We saw what is a financial debt. Now we have to see what is an operational debt. Operational debt is dues for provision of goods, provision of service, dues for employment, and debt regarding the payment of dues under any law and payable to any central government or state government or any local authority. We already saw this once. Now, I try to include some sample MCQs so that you understand what are the types of questions which come. Can you just put the answer to this question on chat, please? Debt includes financial debt, operational debt, both of the above or none of the above? Okay, I think everyone is understood what we have been talking about till now. Everyone has answered correctly. Answer is C, both of the above. Yeah, we are on the way to becoming professionals. Okay, so now what is the process flow? See, we said that here, dues for provision of goods, dues for provision of service, and dues for employment or debt regarding payment of dues. For everything, there is a due. So what happens is that you, for the process of this application by an operational creditor, it is a two-step process. For a financial creditor, default is established, and once a default is established, you file the application. Whereas for an operational creditor, it is a two-step process. One is you confirm the debt. You confirm a debt through a demand notice. You issue a demand notice in Form 3, or you raise an invoice in Form 4. And once, based on whatever is the outcome of this confirmation, you make an application to NCLT for resolution. Now we'll see what is this confirmation of debt. One, so the confirmation of debt is through a demand notice in Form 3. It is integral. When you have to file a copy of this Form 3 also to the along with your application. So you send a demand notice to the operational, to the corporate debtor, demanding payment of the operational debt towards which the default has occurred. So your vendor has not your principal has not paid you the amount. So you are raising a demand notice to him in Form 3, or you can also raise Form 4, raise an invoice in Form 4 and ask the person to make the payment to you. Now, it is his responsibility, we'll see in the subsequent slide, to respond to your demand notice. Now, if the debt, this is very, very, very important. Please always, as you know, this will also as an advisory going from you as a chartered accountant to your clients, ensure, I told you, ensure balance confirmation. If there is a dispute, ensure that your dispute is captured somewhere. Create paper trail, have logs, send emails. Somewhere, if the debt has already been disputed, then the process under this code is not possible. If there is a genuine quality issue with whatever has been supplied, ask your client to make it an issue and create the records for it. Because tomorrow, if your client has not made the payment, then that person is well within his rights to raise, issue a notice to you under IBC. Now, if you have the paper for this dispute, okay, then you can say there is a dispute which is already there, then there is no question of this person sending, filing an application in the NCLT. This is an advisory. We advise a lot of people. There are people who come and say, ma'am, this person has not been making payment to me. If there is no, communication whatsoever from that person, there is no balance confirmation, but he, saying that these are the issues, there is no reconciliation. There is no records to say that there is a quality issue. and the debt is acknowledged in the balance sheet, then you can very well tell your client, let's issue a form 3 notice or send an invoice in form 4, and he does not get back to your client within that 10 days, then automatically you can file an application. So this is a very major advisory section which we all are bound to use in our day-to-day practice. So likely situations when your notice is going to be sent, provide the evidence of existence of dispute, if any, record or record of pendency of suit or arbitration proceedings before the receipt of such notice or invoice in relation to the dispute. What does this mean? See, you have sent your notice. So within 10 days, okay, within 10 days, the debtor has to provide you with one, evidence of dispute. That's why I said create records of dispute. Create records of dispute, and the creation of records for dispute should be before the receipt. You know, there are some people who think that they are very smart and they will actually try, as soon as they receive the notice, they'll try to create the records of dispute. No, it should be before the receipt of such notice or invoice in relation to the dispute. Or 2, if the debtor has already paid this creditor, then he has to provide the payment details along with proof, attested copy of electronic transfer or encashment of check by the operational creditor. Or he doesn't have, he has no records of any of these things. The debtor may as well decide to pay after the receipt of the notice. So you know what happens is you've enabled your client to get the payment. So what are the three things within 10 days what the debtor has to do after he receives the notice? 1, provide that details of any dispute which is existing, or say, boss, I've already made the payment to you, these are the details of the payment, or say, okay, no problem, here, take the payment. These are the likely situations when a notice is sent by your client. So what happens? He's got the confirmation of the debt. He has to apply to the NCLT for resolution. If no response is received, no response was received about any dispute or about the payment, or no payment is also received, he doesn't make any payment, then an application is preferred to the NCLT within 10 days. So here your initiation of insolvency is happening. So what are the procedural aspects? This is all in the rules. This is initiated by the operational creditor. Default has occurred, that is, no payment has been made, no dispute has been established as at the date of the demand notice. The application should be made in form number 5, and the fees here is 2,000 rupees. In the case of a financial creditor, it is 25,000 rupees. These are the mandatory attachments: demand notice in form 3 or invoice copy in form 4, affidavit that there is no dispute raised by the debtor, certification from the financial institutions that there is no payment. So normally what happens, in case any payment has been received, then that certification will be there, such and such a date this payment was received, and copy of any record from an IU. So nowadays it is become a practice to update the details of any of these lending transactions with the information utility, and you can obtain copy of records from an information utility. And here, this is an examination. All these are examination points. I'm sorry. This is a very important point. Insolvency professional may be proposed in form 2. Here it is may, whereas in financial creditor under section 7, it is should be proposed. What is the application format here? They will apply according to rule 5. The OC will submit to the CD demand notice in form 3 or copy of invoice in form 4, and it is to be served at the registered office or in electronic means, and copy of demand notice to be filed. They have to file it with the information utility also. The required documents we already saw, it has to be attached in the application to the NCLT made by the operation creditor in form C. And now again, it becomes mandatory to send a copy of the application to the board and to the registered office of the CD by registered post, speed post, hand or electronic means before filing with the adjudicating authority. So the OC, before filing with the adjudicating authority, has to serve a copy of the application to the CD as well as to the board. The board has to, see, these are compliances. There is no, you have to ensure that it is complied with as a resolution professional. And this again, application can be filed online, and you can give a soft copy also. And the fees is rupees 2,000 as per Rule 10. So for an application to be admitted, application should be complete, operational debt should remain unpaid, invoice and demand notice. You have to actually keep a copy of the proof of delivery. See, these are things which, even though as chartered accountants, we all will know and have it in our records. When it comes to these court proceedings, we will, some of us, I'm not saying all of us, some of us, I was lacking a lot in it. It's only now with experience, I have learned a lot. Proof of delivery has definitely got to be submitted along with the application. The debt is not disputed by the CD affidavit. Copy of certificate from financial institution or an information utility, that also you have to submit. There should be no disciplinary proceedings against the RP in case any RP is going to be suggested. And in case of any defect, again 7 days time will be provided to rectify. In case all these are found to be in order, the NCLT may within 14 days pass orders for CIRP. So what are these are very important. Please be very thorough in this. Every single box here is a question point in the examination. You can straight away, it will be a cakewalk. For every question, you can get 1 mark very easily. So the 0th day is the day on which the operation creditor is going to send the demand notice or invoice. Within 10 days, the CD, the corporate debtor, has to give the proof of dispute or proof of payment, or he has to make the payment. After 10 days, in case this OC is not receiving any of this, the OC can file an application with the NCLT. Within 14 days, the NCLT can admit the application or reject. In case of rejection, within 7 days, the OC has to rectify the defects, if any, in the application and file it. So these timeline charts, please make timeline charts for yourself for every single activity within the code. It will enable you to clear the exam very easily. So we've seen application by a financial creditor, operation creditor, and now it is by the corporate applicant. So this is the application by the corporate debtor himself. So it is not necessary that some external person makes the application. The corporate debtor may himself decide, okay, I cannot continue, let me file for insolvency. So who can do it? Who is a corporate applicant? One is a corporate debtor himself, or a member or partner of the corporate debtor authorized in this behalf, or a person who has control and supervision over the financial affairs of the corporate debtor, or an individual who's in charge of the managing the operations and resources of the CD. These people can file an application against for insolvency for the corporate applicant. So what is the procedure? It is done by the corporate debtor himself. Default should have occurred in payment of debt. So I acknowledge as the corporate debtor that there is a default. Just a minute. So the application should be filed in Form 6 along with the fee of 25,000 rupees. What are the attachments? Here, you have to attach the books of accounts and other documents, especially pertaining to the default. Information in relation to the RP, compulsory. It should be proposed. It is mandatory. Then a special resolution, because you know the corporate cannot, just like that, somebody in the corporate cannot take a decision to file an application. There should be a special resolution passed by the shareholders or 3/4 of the total number of the partners of the CD in case the CD is an LLP. Now, here again, the resolution professional should be proposed in Form 2. And what does the NCLT do? Accept and pass order if all is found complete within 14 days, or else reject. And if there is a disciplinary committee proceeding pending against the proposed RP, also the application will be rejected, and provide 7 days time for resubmission after rectification. See, here I want to say, in case there is a disciplinary proceeding pending against the resolution professional, the adjudicating authority will ask the board to propose an RP, and the board has got to propose the name of an RP against whom no dissolution disciplinary mechanism is pending. Okay, and they have to appoint only that RP. What are the things? Then they have to attach the required documents and records with the application, and the copy of the applications should be sent to the board by registered post or speed post or by hand or electronic means before filing with the adjudicating authority. These are all recent requirements. We definitely have to ensure that they are complied with. And every single point, registered post, speed post, hand or electronic means, it looks very simple, but if it comes in the form of a question, then we may have a doubt as to whether it is not, why should there be by hand there, maybe it is not there. So please ensure that you read all the points carefully. So now we know who can make an application. You know the FC, the OC and the corporate applicant. Who cannot make? One is a corporate debtor undergoing a CIRP. If he is undergoing a CIRP, he cannot make an application. A corporate debtor having completed CIRP 12 months preceding the date of making of the application. A corporate debtor or financial creditor who has violated any terms of the resolution plan, which was approved 12 months before the date of making of the application. So if there was a resolution plan which was approved and the terms have not been complied with, they have been violated, then that corporate debtor or financial creditor cannot make an application. A corporate debtor in respect of whom a liquidation order has been passed cannot make an application. So now, again, I'm just giving a kind of a revision for the form numbers, formats. Application by financial creditor is in form number 1. Written communication by the resolution professional is always form 2 for all these applications against 1, 5, and 6. Demand notice, notice of demand served by the OC is 3, and 4 is copy of invoice. Operation creditor will make application in form 5 and corporate applicant in form 6. All these 1, 5, and 6 should be accompanied by 2, and 5 will be accompanied by 2, 3, and 4. So the fees is 25,000 for a financial creditor. Corporate applicant is 25,000. Operation creditor is 2,000. Please remember that also. So what are the relevant documents we have seen? Proof of debt and default. All the 3 people who are eligible to file the application have to give, mandatorily submit a proof of debt and default. Consent of resolution professional in form 2. Yes, for all of them. Proof of payment 25,000, 2,000, 25,000 is definitely to be accompanied. Demand notice in form 3 will come only for operation creditor. What you should remember is section 7 is financial creditor, 9 is operational creditor, and 10 is corporate applicant. So demand notice, only an operational creditor will demand, because here the corporate applicant is accepting that there is some debts which are due, there's some default on some debt, and financial creditor, we already know that there is a default. So the operation creditor has to establish the default, because I cannot say I supplied goods and services, I did not receive payment, it is not sufficient. I have to establish the default in form number 3 or form number 4 and append it to the application. Books of accounts relevant to the default, again here it has to be attached. Special resolution and 3/4 consent of partners, it is only for corporate applicant. Information related to the RP is got to be applied, attached here. That is, we saw it is mandatory in form 2 for a financial creditor and corporate applicant, not mandatory for an operational creditor. Statement of affairs up to 14 days of application. So if I'm a corporate applicant who has acknowledged my default and I am filing, I have to file a statement of affairs up to 14 days of application. And in case of joint applicants or for a financial creditor, we saw two or more applicants can join together and make. Authorization for one person has got to be given in the case of a financial creditor. Operation creditor and corporate applicant, it is not applicable. What are the other relevant documents? Again, copy of relevant accounts from bank or financial. We saw that, payment, copy of payment authorized by the financial institution has got to be attached by an operation creditor, and then an affidavit in support of the application has got to be given by an operation creditor and by a corporate applicant. So these are all from the rules and regulations. So now there is a question here. Which among the following is not entitled to initiate a CIRP? A corporate debtor in respect of whom a liquidation order has been made, a corporate debtor that has not gone through a CIRP, a financial creditor, or an operation creditor. Can I have some answers for this? So A. Yeah. Okay. I think everyone is able to follow me. Yeah, the answer is A. A corporate debtor in respect of whom a liquidation order has been made is not entitled to initiate a CIRP. There was a query as to why whether a person who's going to initiate it is going to be called as a corporate creditor. No, he is only a corporate applicant. Who can initiate a CIRP? Only the CD, financial creditor and operation creditor, financial creditor, operation creditor, and corporate debtor, or corporate debtor and financial creditor. It's a very easy question. You know, at least 50% of the questions would be direct questions like this, and the others are the pain points going to be. Yeah, I think yeah, Mr. Abraham, please type your question. Yeah, so the answer to this is C. All the three of them. I saw some answers as B. Even a corporate applicant can, even a corporate applicant can make the application. We saw that under section 10. So the answer is C. Yeah, Mr. Ibrahim, government dues are operational debt. When we saw the definition of operational debt, we saw even government dues, any amounts due to any statutory authorities is an operational debt. So it is correct. Government dues, will it come under operation creditor? Yeah, they are. It will come under operation creditor. They are operational debts. So now we'll see what is the time limit. When we saw if you see in the preamble to the code itself, it will say it is a time-bound process. Okay, and in the BLRC report also, IBC, adoption of IBC was mainly because of the timelines, time-bound process within a period of 180 days. So the period of 180 days is from the beginning of the insolvency commencement date. So you may get a question saying that what is the period or from which date? Okay. So the RP shall file an application to the adjudicating authority, which is the NCLT, to extend the period beyond 180 days if instructed to do so by a resolution passed at a meeting of the COC with 66% of voting shares. See, so the code mandates that this insolvency has to be completed within a period of 180 days from the insolvency commencement date, which is the date of admission of the application by the NCLT. And in case there is a necessity to extend the insolvency period, then the COC, that is the committee of creditors, have to pass a resolution to ask the RP, the resolution professional, to file to the NCLT. This resolution will be passed with 66% of voting shares of the COC. And if the adjudicating authority is satisfied that the CIRP cannot be completed within 180 days, the AIG may order an extension of the CIR period for a further 90 days. They cannot allow an extension beyond 90 days, and it cannot be granted more than once. But if it is now, there is a provision to complete the entire process within 330 days to give room for the legal delays, adjudicating authority delays, judicial delays, whatever delays are due to that, but it cannot exceed 330 days. So this is an MCQ. What will be the maximum time limit in which the process shall be completed from the insolvency commencement date? Yeah. So I'm getting right answers. It is 180 days. But tell me, what will happen if I give the question as what will be the maximum time limit which shall be completed? No, the maximum time limit is 180 days from the insolvency commencement date or the initiation date, or both of above or none of above. Then you have to say it is only commencement date. Yeah, right. Yes. So the A may extend the period for the process beyond the time limit. How many times? Twice, thrice, once, and none of the above. But I have prepared this PPT some time back. Nowadays, you do not get any options as none of the above or all of the above. There will be one more option here. It will not be as none of the above. Yeah, so people have got this also right. It is once. So what is its relevance? Now we've said that it has to be done within a period of 180 days. What is the relevance of this? Not able to understand, please repeat. What is the relevance of this 180 days? See, this 180 days is, sorry, 180, within this 180 days, there is a calm period. What is the meaning of a calm period? This calm period is the term which is used in the BLRC report, during which period the debtor and the creditors are required to define and submit a resolution plan. So, you know, what happens is there is a moratorium and no one can take any action against the CD. You know, it's like you're giving them peace of mind to try and resolve the default, resolve the debt default situation, or alternatively liquidate the company and wind it up. This is the relevance of the CIR time period of 180 days in section 12. Now we come to this, how can an application be withdrawn? See, when, yeah, Mr. Ibrahim, I find it very distracting to see this thing. Can you just type your question? Yeah, I said, please, none of the above. See, what happens is in any question, there will be 4 options. Okay. Sometimes the option here I would have given as none of the above, but in the exam, they will not give you the option as none of the above. So instead of, you know, the extension cannot be given, can be given, 1 minute, I'll tell you how it is. Here I say AA may extend the period for the process beyond the time limit dash only, twice, thrice, once, or I would give it here as no extension will be given instead of none of the above. That is what I meant when I said none of the above is not given in the examination nowadays. So we will see this withdrawal of application. Any person, you know, is given an opportunity to change their mind. That is the principles of, as per principles of natural justice, you do need to be given an opportunity to change your mind. So the adjudicating authority may allow the withdrawal. This is may allow the withdrawal of application under section 7, 9, or 10. We know now only these 3 sections an application can be made on an application made by the applicant with the approval of 90% of the voting share of the COC in such manner as may be specified. So this is after the COC is formed. If the applicant wants to withdraw the application, they have to go to the COC and get 90% voting share approval and then only withdraw the application. This withdrawal of application will be, 1 minute. How is it done? This withdrawal of application will be done by this regulation 30A, which gives you the process of withdrawing the application. So this application for withdrawal under section 12A will be submitted to the IRP or the resolution professional, as the case may be, in form FA of the schedule. So there is a schedule in the regulations which will give you form FA before the issue of, just 1 minute. So before the issue of an invitation for expression of interest under regulation 36A, we'll see what that regulation is soon. It is calling for the resolution plans. So application will be accompanied by a bank guarantee towards the estimated cost incurred for the purposes of C&D of regulation 31 till the date of application. See, you decide, the applicant is deciding to withdraw the application, but during that interim period, there would have been certain costs which have been incurred. So that cost estimation is made, and the applicant should give a bank guarantee. Suppose there was an expense of around, say, 1.5 or 2 lakhs, which was incurred by the RP during that period. That 2 lakhs bank guarantee has got to be given by the applicant to cover those costs. The COC shall consider the application made within 7 days of its constitution or 7 days of application, whichever is later. And where the application is approved by the COC with 90% voting share, the RP should submit that application for withdrawal on behalf of the applicant within 3 days of such approval, and the adjudicating authority may approve the application for withdrawal, saying that yes, this application can be withdrawn. So the application for withdrawal can be made under section 12A, read with regulation 30A. So this is the application which we saw under section 7, 9 or 10. They can make the withdrawal of the application as per regulation 30A. Now, what are the orders passed? So we said now the adjudicating authority has admitted the application. So once the application is admitted, an order is passed by the NCLT. Now, what does the order envisage? The order will say that, if you read the order, you will know it will declare a moratorium for the purposes referred to in section 14. We spoke about a calm period sometime, a few slides back. This is a moratorium period. No action can be taken against the corporate debtor during that period. Then in the order, the NCLT will say a public announcement has got to be issued about the initiation of the CIRP immediately. The operative word there will be immediately after the appointment of the IRP, immediately after the appointment of the IRP, and call for submission of claims under section 15. So your order which is issued by the NCLT will say, 1, moratorium is declared. 2, they'll say a public announcement has got to be issued immediately on the appointment of the IRP and call for submission of claims, and also appoint the IRP. So if you have signed the form 2 and given along with the applicant in the application, you will be appointed as the IRP if your name has been approved by the board as not having any disciplinary proceedings. This is as per section 16. So you have your 14 is your moratorium, 15 is your public announcement, and 16 is the appointment of the interim resolution professional. And where will all this come? This will come under the order which is passed by the adjudicating authority admitting that application. So what is this moratorium? I told you this is the calm period. So the AA itself will in the order specify such and such actions cannot take place during the period of moratorium, which is generally the 180-day period, or if it is extended. Yeah, I will be thing. So as on the insolvency commencement date. Okay, this is only as on the insolvency commencement date, which is nothing but the date on which the application is going to be admitted. So what does it say? Institution of suits or continuation of pending suits or proceedings against the CD, including execution of any judgment, decree, or order in any court of law, tribunal, arbitration panel, or other authority is prohibited. Transferring, encumbering, alienating, or disposing of by the CD of any of its assets or any legal right or beneficial interest therein. So the CD cannot say, okay, fine, I have so much of property, I'll dispose it off and pay. No, the moment the application is admitted, he loses all rights over any of the assets of the CD. As on the insolvency commencement date, he will also prohibit any action to foreclose, recover, or enforce any security interest created by the CD in respect of property, including any action taken under the surface. See, recovery of any property by an owner or lessor where such property is occupied by or in the possession of the CD. Now, suppose the CD is occupying any property of some other person, that person cannot evict the CD during the moratorium period. So a license, permit, registration, quota, concession, clearance, or similar right or grant given by the central government, state government, local authority, etc., shall not be suspended or terminated on the grounds of insolvency, subject to the condition that there is no default in payment of current debts arising for the use or continuation of the license or similar grant or right. See, so what happens? This is in case, just imagine it is a company which is involved in mining and it is operating on a mining lease. Now, suppose the mining lease has been kept current, the government also cannot withdraw that license or terminate it or suspend it. It has to continue because one of the basic tenets of the court is as a going concern. So this license cannot be withdrawn. That is specified in section 14. Supply of the essential goods or services cannot be discontinued or terminated or interrupted during the moratorium period. If you go to regulation 32, the essential services will be defined as electricity, water, telecom services, and information technology services. So where the IRP considers the supply of certain goods and services as critical. So as an IRP, you identify certain goods and services as critical for the operations of the CD as a going concern. And if the CD has paid for those services or supply of goods, then those goods or services should not be interrupted or terminated. Now, the provisions of this section will not apply to any transaction which may be notified by the central government or a surety in a contract of guarantee by a corporate debtor, which will be taken as separate. And the order for moratorium shall have effect from the date of such order till the completion of the CIRP. So provided that where at any time, so what happens, it says that it is applicable, it will be if in effect from the date of the order till the completion of the CIRP. What happens in case in between? Provided that at any time during the CIRP, if the adjudicating authority approves the resolution plan. We already have talked a little about resolution plan, which we know. Now that is dealt with under section 31(1). So if the AA is going to approve the resolution plan or passes an order for liquidation, has not approved the resolution plan, and so says that since the plan is not approved, the CD can go under liquidation, the moratorium shall cease to have effect from the date of such approval or liquidation order as the case may be. So now we saw that the order under section 13, the case is admitted and the order is issued. First thing is moratorium is imposed. Second is the order will say public announcement has got to be made. What does the order say? It is the public announcement is issued to intimate the general public on the commencement of the CIRP. Everyone has to know because there will be various creditors against the company. So to whom information should go. And what does it do? Once you do the public announcement, you will have to collect the claims from the various creditors to whom money is owed by the corporate entity. So here it says the public announcement shall be made by the IRP, the interim resolution professional, and order will be this fact will be included in the order by the NCLT. So what are the contents of the public announcement? There is this form. And in that form, these are the mandatory contents. What is it? One is the name and address of the CD, name of the authority, where is the CD registered, ROC Chennai, ROC Mumbai, whatever it is. Last date for submission of claims, details of the IRP, the person who's in charge of this, and penalties for making false and misleading claims. That should also be included, because some people will come up with some false and misleading claims, and the date on which the CIRP shall cease. So you need to prepare an Excel table with timelines. You put in the date, make a template, put in the date of commencement of CIRP, and automatically all the other dates ending with this 180th day should be computed in your template. So try and keep all these things ready once you complete the examination, so which is 180 days from the date of completion of the application, admission of the application. So I saw a question about what is the meaning of immediately. Wherever you see, it says that in the order itself, it will be given that the public announcement should be made by the IRP immediately. Okay. Immediately refers, as per regulation 6, refers to not more than 3 days. Not more than 3 days from the date of admission, which will be the date of appointment of the IRP. A public announcement has got to be made in the newspapers. So now, what is the type of newspaper and what does it happen? Public announcement will be made in one English and one regional language paper with wide circulation at the place of registered office and principal office of the CD, and in any other location as may be necessary as per the IRP where the CD conducts material business operations. So you should, have already done some due diligence about your CD, because you are going to give your form 2, or in case you're going to get appointed by the adjudicating authority by itself, then you will have to quickly do some due diligence, and you have to find out where the CD has got major business, and ensure that you issue the public notice in that location also, because as may be necessary, any other location as may be necessary. One is it the registered office, and the 2 is the other place where you consider it necessary. It should be in English and in one regional language newspaper with wide circulation. And website of the CD or the website designated by the board. If it is a listed company which has, or any private limited company which has a website, you have to post the public announcement there also. And board also, you have to submit your public announcement after you make it. There are tabs which are available to submit it to the board and to the IPA. State where the claim forms can be downloaded or obtained from. See, you're going to call for claims from the various creditors. So you have to state, tell them from where they can get the claim forms with which they have to submit their claims, and offer the choice of 3 insolvency professionals identified under Regulation 4A to act as authorized representatives. See what happens. We already know that in the case of depositors or people, any class of creditors, they are called as class of creditors, a class in which there are many creditors. Okay, there may be depositors, so there may be 1,000 depositors. So to represent all these 1,000 depositors, one authorized representative will be appointed. So that authorized representative should be an insolvency professional. And how is that authorized? See, and this authorized, even in the case of allottees for real estate projects, we already said under that section 5(8)(f), I think you have to appoint one authorized representative, and the application can be made by a minimum of 100 allottees. Now, these 100 people, more than 100 people will be represented by an authorized representative. So you as the RP have to offer a choice of 3 insolvency professionals in the public announcement itself. So you will say there will be a column for authorized representative, and you will give 3 names there. And out of those 3 names, whichever creditor is going to make a claim, he will also give a choice of these 3 insolvency professionals, and whichever professional is going to get the maximum number of choice, that person will be recommended to be appointed as authorized representative for that particular class of representatives to the NCLT, to the adjudicating authority, and the adjudicating authority will ratify that appointment. Then your public announcement will also give the last date for submission of proof of claims, which will be 14 days from the date of appointment of the interim resolution professional. And expenses of the announcement shall be borne by the applicant and may be reimbursed. See, here may is the operative word. It may be reimbursed by the committee to the extent ratified. So what happens is this applicant is initiating the CIRP and the public announcement is mandated in the order. And the public announcements, if you know, are quite expensive, and the RP has no choice but to release. Once you get appointed, you have no choice but to follow the timelines and the code of law to a T. So what happens, whatever be the cost of the public announcement, you're supposed to incur it. Now, this cost is supposed to be incurred by the applicant. Okay, but nowadays what happens is the order itself says that ask the applicant to deposit some money with the RP so that these expenses can be met. Now, this cost of announcement can be to a certain extent, maybe not fully, partially ratified by the committee, and it will be reimbursed later as a part of the CIR cost. The expenses of the announcement shall not be a part of the CIR cost. Sorry. So if they are reimbursing, the committee will reimburse it. If they do not reimburse it, you cannot claim it as a part of your CIR cost. It is going to be a loss in your hands if you're not going to get it reimbursed by the applicant. So what are the specific aspects? Form of public announcement is Form AA. And Form A, public announcement will be made in Form A. The consent, written consent. The first one we saw was Form 2, written communication, which will go along with the forms of the filing while finding the application by the FCOC and the corporate applicant. You have to give Form 2, whereas if after the formation of the COC and your term is going to get extended as an RP from IRP, or the IRP is going to be replaced, this written consent has got to be filed with the NCLT in Form AA. Written consent to act as an authorized representative. So here we said that offer a choice of 3 insolvency professionals. So you have to include the name of those 3 insolvency professionals in your Form A. And you have to get their consent in Form AB. So 3 people you identify, get their consent to act as authorized representative in Form AB, have it on your records and publish their names in the Form A. And whomsoever of these gets the maximum votes, you're going to appoint as an authorized representative. So your claims, you say last date for calling for submission of claims is 14 days. So who are the people who can submit the claims? Operational creditors except workmen and employees. We already know what is the definition of this operational creditors. So one is the operational creditors for goods or service. They will give in Form B. Employees will give in Form D. Okay, financial creditors will give in Form C. Creditors in a class in Form CA. That is these people for whom this Form AB is taken from authorized representatives. They have to give in Form CA. Proof of claim by workman or employee in Form D. And suppose there are more than 100 employees, then they can, or not more. If there is a group of employees, more than 10, they want to get a authorized representative, they can get an authorized representative in Form E. Okay, I think I should go a little faster. I have only 1 more hour. So submission of claims. We have seen now what is the public announcement, and in the public announcement, you're going to ask for the claims. What is the time period and all this. So as per Regulation 7, okay, this operational creditor will submit the claim in Form B. How does he submit? He'll submit it with proof to the RP in person, by post, or by electronic means. This person may submit supplementary documents or clarifications and submit in support of the claim before the constitution of the COC. They have to see, as an interim resolution professional, you have to collate the claims and form the COC, but you have to get the adequate records, supporting evidences. This is where your expertise as a chartered accountant comes in place. And this is also one of the ways in which a person can assist an RP. So there is a very healthy ecosystem for providing services to the resolution professional, which an chartered accountant can empanel for. So the existence of debt due to the OC under this regulation, it will be proved maybe with the records available within information utility or with any other relevant documents. What are the other relevant documents? Contract for the supply of goods or services. You normally enter into a contract or a PO, whatever you have in your hand, you have to submit that. Invoice demanding payment, we already saw Form 3, Form 4, you have to give, and only if that default is established, can you do this. So this an invoice demanding payment if you have that, an order of a court or tribunal that has adjudicated upon the non-payment of a debt, if any, or financial accounts. So you have to submit all these along as records of evidence of the claim which you are making as an operational creditor. Now Form C is by financial creditors, which may be by the lenders. Other than any person claiming to be a financial creditor, other than a financial creditor belonging to a class. We already know that people who have, given deposits or any allottees, they are also considered to be as financial creditors. Any of the creditor other than those can submit claim with proof to the IRP, and they have to submit the documents and clarifications. Again, existence can be proved with records available within IU or any other relevant documents, which includes again the contract, which is evidencing the debt, record evidencing amounts committed have been withdrawn. So the disbursal of that particular amount and withdrawal of those amounts from the financial creditor, financial statement that showing that the debt has not been paid, and an order of a court or tribunal that has adjudicated upon the non-payment of a debt, if any. Then regulation 8A says in Form CA. Form CA is the claim which is made by a creditor in a class. So any person who's going to be a creditor in a class will submit it Form CA. And again, you have to prove the existence of debt. One always, now in the recent times, because information utilities are very recent formation, records are available. So as soon as loans are disbursed, nowadays records are submitted to the IU, which is there, NESL, and you can take records from the information utility, and also any other documents like agreement for sale, letter of allotment, receipt of payment made, or such other document evidencing existence of debt. So this creditor, in this Form CA, there will be a clause which says who is the insolvency professional. You are choosing among the three choices which is given in the Form A, that is a public announcement. They will indicate the choice in this form, and from amongst these three choices, the IRP has to take, he has to physically maintain records, count, and maybe put it in an Excel sheet or count who has got the maximum number of votes by the various creditors, and that person will be recommended to the NCLT for appointment as authorized representative. Now, workman or employee, again, they can submit it in Form D or Form E through an authorized representative. And they can submit supplementary documents or clarifications, or it can be called for also by the IRP before the constitution of the committee, and where there are dues to numerous employees. So I told you, when there are more number of employees, an authorized representative is appointed to submit one claim of with proof for all such dues in Form A. Existence of the employees or workmen can be proved by the records available with the IU or with other relevant documents, which includes your employment contract, appointment letter. Then you would have the employee would have given a notice demanding payment of unpaid dues like salary or other benefits, or an order of a court or tribunal that has been adjudicated upon for the non-payment of dues. See, this employee dues is actually taken very seriously by the adjudicating authorities, and it is essential that the employee dues are collated, and at the time of payment also it is paid properly, and also any claims which are made by the PF authorities are also dealt with properly. Regulation 9A is as per Form F, that is any creditor other than those covered in 7, 8 or 9, they will submit it in Form 9A. And again, you have to prove the existence based on records available with the information utility or any documentary evidence demanding satisfaction of the claim, or bank statements showing that you have not received the payment, or an order of a court or tribunal that has adjudicated upon the non-satisfaction of the claim. Other aspects is substantiation of the claim. What happens is the RP, you as RP have got to be satisfied that the claim which has come to you is genuine. Whether it is actually a financial creditor, whether they have actually lent some money, whether it is there in the balance sheet. You will be doing verification in various ways, and you can call for such other evidence of clarification as you deem fit from a creditor for substantiating the whole or part of the claim as per Regulation 10. And the cost of producing that proof is on the creditor. He cannot ask the RP to pay for these costs. Submission of proof. The creditor can submit the claim with proof on or before the last date mentioned in the public announcement. And in case you this is wrong. In case he fails to submit the claim with proof within the time stipulated, he may submit the claim with proof to the RP. I'm sorry, I've not made the change here. I'll make it and give. 1 minute, I'll just note it down. It is within 90 days. So, where the creditor is a financial creditor under Regulation 8, it shall be included in the committee from the date of admission of such claim. And such inclusion shall not affect the validity of any decision taken by the committee prior to such inclusion. So, if you have not been included in the COC and you make a claim within the time stipulated in the public announcement, you can make the claim within 90 days. This is not applicable. So, and once you make the claim within 90 days, your claim will be accepted and you will be made a part of the COC in case you're a financial creditor from the date of acceptance of that claim. And that is this admission of such claim. And whatever is the decision which is taken by the COC prior to the admission of this FC will not be invalidated because of the admission of the new person. So verification of the claim will be verified, every claim will be verified as on the insolvency commencement date within 7 days from the last date of receipt of claim. So you have 14 days from the ICD, and from that 7 days, within 7 days, you have to verify the claims, and thereupon you have to maintain a list of creditors containing the names of creditors along with the amount claimed by them, amount of their claims, security interest, if any, that is in the case of financial creditors in respect of such claims, and you have to keep updating it. Verification, how do you do it? In Regulation 13, what happens is once you prepare this list, it should be available to any of the people who have submitted it. It has to be available for inspection by members, partners, directors, or guarantors. It should be displayed on the website. It should be filed on the electronic platform of the board. Okay, so the IBBI will also ask you to file a list of claims which you have received and admitted. All the details you have to file. There is a format for that. And it has also got to be filed with the adjudicating authority, and it has also got to be presented at the first COC. These are mandatory. Once you finalize your list of creditors, what do you have to do? You have to file the list of creditors with the NCLT. You have to upload it to the board, and you also have to present it to the first meeting of the COC, apart from keeping it available for inspection by the persons who submitted with the proofs of claims, and also members, partners, directors, and guarantors of the CD. These are all extremely painful touch points which you have to keep in mind always when you are practicing. Then determination of the amount of claim, in case it is not, you're not able to determine the amount claimed precisely, then you will have to make the best estimate of the amount of the claim based on information available to him. And in case you are able to revise the amount of claim admitted as soon as practicable because of some additional information, you can revise the amount of claim. In case the debt is in foreign currency, you have to take the RBI reference rate as on the insolvency commencement date as per regulation 15. So now we've done up to the claims, you've got the claims, you verified the claims. Now what happens? You have the various insolvency resolution professional. You've been appointed as per section 16. Under section 16, you have been appointed in the order. Your name is mentioned in the order, and it is said that you're appointed as the insolvency resolution, interim resolution professional. So what happens? The adjudicating authority appoints the IRP as on the commencement date. The resolution professional specified in the application. So in case it is an FC or a CD, the corporate applicant, they specify the IRP, the name of the resolution professional. And if there is no disciplinary proceeding pending against him, that that resolution professional is appointed as the IRP. It will continue till the date of appointment of the resolution professional under section 22. We already saw that under section 22, the COCs during the COC first meeting, the agenda item would be to continue with the existing IRP or to appoint a new RP. So if the application does not specify the resolution professional, the adjudicating authority will make a reference to the board regarding the name of the RP to act as IRP, and the board will recommend an IRP within 10 days from the receipt of reference from the adjudicating authority. So if the NCLT Chennai is going to make it, NCLT Chennai will make an reference to the board, and the board will recommend a name, and that person can be appointed as the RP. So normally what happens is IBBI maintains a panel of insolvency professionals who are eligible to act. So you have to keep updating your name in that empanelment form, and it is from this form that the IPs are referred to the NCLT for appointing. A lot of people get appointed cases through the NCLT also because the names are empaneled with IBBI. So when an application is made naming the RP, then the RP will be appointed as IRP when no disciplinary actions are pending against him. So now what happens? You've been appointed as the IRP. I tell you that now, even though this, novelty, I tell you, once the novelty of being appointed as a resolution professional goes, you will understand this profession is a very, very, very intense profession. It's very compliance driven, and you will be under a lot of pressure to, meet with the compliances required by the IPA, by the board, and also by other authorities like SEBI in case of listed companies, income tax authorities, your GST authorities, your ROC. You have to essentially handle all these authorities, compliances with all these authorities, apart from the external pressures of the creditors of the company who will start once they make the claims, will start harassing you for repayment of whatever is the due to them. Apart from the board, which gets suspended. If you see here, the word here is suspended. The board which gets suspended on your appointment as the IRP, and they will be very, I would say, very resistant to your appointment. They would not be willing to give up their power. So, once you get into the shoes of a resolution professional for a corporate, you also need to exercise a lot of diplomatic skills, as well as, be on the top of all your professional commitments, on the top of all the compliances, and also a lot of people management skills, because you will be dealing with the employees, erstwhile employees, and also the vendors, and maybe the CD is also a going concern. It's running, it's operating. So you will immediately be taking over the running of the CD also. So it is a very, I myself feel that it's a very intense profession. And if you are taking up insolvency as a practice, it is very advisable to have it as a separate vertical in your firm, with the person who's done the exam heading that, and you need to have a team who's working, and a very supportive team. And you also need to have a network of other professionals like company secretaries, or other chartered accountants, your advocates. Help is needed a lot for this profession. So management of the affairs of the CD by the IRP, once the day that you get appointed as IRP, you automatically start managing. The powers of the board get suspended. So there are, the day the order comes, automatically the board gets suspended there, and officers and managers of the CD have to report to the IRP and provide access to such documents. So what happens? I'm appointed as the CD. I have to go to the CD's place or registered office and take control and custody of the assets, take control and custody of the financial assets, take control and custody of the accounts, take control and custody of the working capital, of the stocks which are there, raw materials, finished goods, work in process, everything you have to take in control. So you need to have a team. When you go there, you need to go as a team. You need to take someone who is savvy in Tally, who's savvy in SAP, who knows how to take backups, who knows how to lock your Tally, who knows how to, at least you take a printout of the trial balance as on that day, get it initialed by the officers. So, you will be boggled down with all these activities. And the financial institutions, whoever is maintaining the accounts of the CD, they will have to act only on your instructions. You will have to take custody of the checkbooks. And from the day that this application is admitted, the board of directors cannot sign any checks. Only you will have the authority to sign any checks on behalf of that particular CD. And whatever is information that is required will be by you will be furnished by the financial institutions. Any deeds, receipts, or other documents which need to be executed, only you can execute. And you will have to perform all your actions subject to the conditions which are specified by the board, subject to the restrictions. You don't get an nice what do you say, authority to do anything and everything. No, it is not like that. There are certain restrictions which are imposed by the board. You have to comply with those restrictions. You can access any books of accounts and records and other relevant documents with government authorities, with statutory auditors, accountants, and such other persons. So what would you do? As soon as you take over as the IRP, you will immediately start issues. On that day itself, you will send letters to all the people whom you know are concerned with the CD. And then you should be responsible for complying with the requirements of any law and for the time being enforced. So you are responsible for filing all the returns, GST returns, TDS returns, everything. And if there is a loss which is going to be incurred to the CD because the resolution professional has not complied with anything, the loss is not going to be reimbursed to you as a part of the CIRP, because no, it is going to be taken out of you are personally responsible for those losses. So there is a circular also issued by IBBI for that. So please remember that you have to comply with all this very, very diligently. Duties of RP, you have to collect all the information relating to assets, finances, and operations relating for business operations for 2 years, financial and operational payments for the previous 2 years, list of assets and liabilities. Just note here as on the initiation date. It is not the commencement date, it is initiation date, and such other matters as may be specified. Receive and collate all the claims submitted by creditors to him pursuant to the public announcement. The moment the public announcement comes, you will be deluged with the claims. You need to have a team which is going to collect the claims, record the receipt. See, you have to maintain records for receipt of the claims. When did it come? Whether it came by email, whether it came physically by registered post, by courier. If it has come by email, take printouts of the email and keep it. So receive and collate all the claims. Once you collate all this, you have to constitute the committee of creditors. This is your major activity as an interim resolution professional. Just remember, you're going to do all this within 7 days of the last date. After 14 days of your date of appointment, within 7 days, you are supposed to form the verify the claims and then form the COC. Then you have to monitor the assets of the CD and manage its operation until a resolution professional is appointed by the COC. So we know already, I've spoken about it a number of times. Under section 22, your COC can either continue you or appoint somebody else. Then you have to file information with the IU as may be necessary. take control and custody of the assets of the CD over which the debtor has ownership rights and perform such other duties as may be specified by the board. What are the assets here? When you're taking control and custody of the assets, assets are whatever are the assets over which the CD has ownership rights. See, you should be very, very clear about what are all the assets, because as the process progresses, you'll understand the importance of the assets, because these are the assets which are going to form a part of the liquidation estate, or these are the assets for which a resolution applicant is going to come. No, because if there is a plant with some proprietary licenses are held, then a resolution applicant will come to buy this CD or come give a resolution plan for this CD, mainly for that proprietary license which is held. So you have to be very clear about what are the assets over which the CD has ownership rights, even which may be located in a foreign country, any assets which may or may not be in the possession of the CD, tangible assets which are whether movable or immobile, intangible assets including intellectual property, securities including shares held in any subsidiary of the CD, financial instruments, insurance policies, and any assets which are subject to the determination of ownership by a court or authority. What are the assets which do not form a part of this this bouquet of assets over which you have to take control and custody? Assets owned by a third party in possession of the CD. Okay, there may be some assets which the CD has over which he doesn't have any rights, but he's only possessing under trust or under contractual arrangements. Assets of any Indian or foreign subsidiary, and such are the assets which may be notified by the central government in consultation with the financial sector regulator. So this is another important section, which is called, which is section 19. Here you're offered a little bit of protection by the code, okay, where, people are not cooperating with you. One, the personnel of the CD. I told you when you go and take, the moment you are appointed, the board is getting suspended. So obviously they're going to be extremely resistant and regressive and, very offensive towards you. So you need to get their cooperation. They are actually supposed to assist the IRP, the board, the CD, the board, and any other persons involved in the management should assist the IRP in managing the affairs. But if they do not assist you or do not provide the cooperation, the IRP shall make an application to the adjudicating authority under section 19(2). So you, under section 92, will file an application with the NCLT praying to the adjudicating authority to direct these personnel or other person to comply with your instructions and to cooperate with you. So 19(2) is the section under which an application is preferred by the IRP or also the RP to the adjudicating authority, asking it to direct the personnel of the CD to cooperate with you. So then this going concern is something for which is one of the basic tenets according to the preamble also of the code. So you as the interim resolution professional should make every endeavor to protect and preserve the value of the property of the CD and manage the operations of the CD as a going concern. So what do you have to do? You can appoint accountants, legal or other professionals, enter into contracts on behalf of the CD or amend or modify the contracts or transactions, raise interim finance, and provided that no security interest, you can raise interim finance. Nowadays there are organizations which will come forward to give interim finance also, but it will be at a slightly higher rate of interest. You cannot create security interest over any encumbered property of the CD without the prior consent of the creditors whose debt is secured over such encumbered property. So you cannot create encumbered on any unencumbered portion, and no prior consent. Without consent you cannot take, but no prior consent will be required where the value of such property is not less than the amount equivalent to twice the amount of the debt. So there is a little room to get some interim finance. Then the IRP can issue instructions to personnel of the CD as may be necessary for keeping the CD as a going concern and to take all such actions as are necessary. So what happens, you're taking over a export company, a company which is exporting, say, leather goods. So, and there are some orders which are continuing at the time of initiation of CIRP. So you cannot go to the company and say that from today the company is closed. No, you have to necessarily continue the orders, ensure that the company is running, ensure that the orders are fulfilled, ensure that you're getting the raw materials, ensure that you're paying the wages of the workers, paying the wages of the salaries of the employees. So all this you have to manage. So, you cannot say I'm only a chartered accountant, I do not have. Once you go in there as an interim, as a resolution professional, you are expected to have all these multifarious skills. So access to information of the CD. This is, I've tried to incorporate both the corresponding regulations also after each section. So as per regulation 4, you can access information with depositories, professional advisors of the CD. You can access information utilities, any other registries that records the ownership of the assets, members, promoters, partners, board of directors, joint ventures, the partners of the CD, contractual counterparties. See, in my case, what I did, I had the security of property which was given by creditor, and that particular creditor, debtor to the company, and that particular person has not paid. So what I found out was this document which was given by this person was a copy of the original document. He didn't give the original document, but an MOD was created. So what I did was I went to the registrar of properties and I have filed an objection petition saying that no sale can be registered against this property unless the amount which is due to me as the liquidator of this company is paid. So I am well within my rights, even as a resolution professional or as a liquidator. I have rights to ensure that whatever is due to the company is collected by me. So I can take any action to ensure that I'm able to collect the money. Then this is another very important thing. When you take over as a resolution professional, you are supposed to conduct a registered valuation of the corporate debtor, and you have to appoint 2 registered valuers within 7 days of appointment. So the IRP within 7 days of appointment has to appoint 2 valuers, and the appointment should be not later than the 47th day from the insolvency commencement date. There are a lot of practical difficulties in this. There may be assets for which, we may not be able to value, but having gone through whatever, been in this profession for more than 3.5 years now, I would suggest that all these things which need to be complied with are practically complied with by you. Just give the appointment letter to them that you have to value the assets of this company. Because if you don't do that, it becomes a non-compliance on you as a resolution professional. And what do these valuers do? They are supposed to determine the fair value and liquidation value of the corporate debtor. And then you have the people who are not eligible to be appointed if they are a relative of the resolution professional or of the CD or an auditor of the CD at any time during 5 years preceding the insolvency commencement date, or the insolvency professional entity, a partner or director of the insolvency professional entity, the IPE, of which the resolution professional is a partner or a director. So what is the fair value and the liquidation value? It is defined in this regulation. Just please go through it. I will not actually talk too much about it, except that the valuers you have to appoint are people who are registered with IBBI, who get registered after taking the examination again conducted by IBBI for the valuers, and the value has to be computed in accordance with the international valuation standards, and also now ICAI has also issued valuation standards. It has to be done in accordance with that. Now, if the 2 valuers who have been appointed give 2 different values, then the RP can appoint a 3rd valuer. He may appoint another valuer who will submit an estimate of the value in the same manner, and the average of the 2 closest estimates will be considered to be the fair value or the liquidation value, as the case may be. Now we come to this important thing, COC. What is a COC? We already saw the IRP will collate the claims. and constitute the committee of creditors. You find out who are all the creditors. You will get the operational creditors, you will get the financial creditors, and financial creditors are the only people who will be there in the COC normally. So IRP will collate and all the claims and determine the financial position of the corporate debtor and constitute the COC. All the financial creditors, excluding the financial creditors who are related parties of the CD, will form the COC. Related parties cannot be in the COC. This will not apply to financial creditors regulated by a financial sector regulator. If it is a related party of the CD solely on account of conversion of or substitution of the debt of equity shares or instruments into convertible equity shares. So they may have become related party financial creditors because of this particular clause. So in that case, they are not related. They can be included in the COC. So all decisions of the COC will be taken by a vote of not less than 51% if it is not specified elsewhere. Sometimes they will say 66% or 91% or 75%, whatever it is. If it is not specified, all decisions should be taken by a vote of not less than 51%. And board will specify the manner of voting and determining. And when there are no financial creditors, what happens? The COC comprises of such persons to exercise such functions in such manner as may be specified. And we all know if it comes as may be specified, there will be corresponding regulations. So subject to regulation subsection 6 and 6A, where the corporate debtor owes financial debts to 2 or more financial creditors as a part of the consortium agreement, then what happens is each such financial creditor in the consortium will get a place in the COC as per their voting share, which will be determined on the basis of the financial debts which are owed to him. Okay, and suppose a financial creditor is an FC as well as an OC, then he will be included in the COC to the extent of the financial debt which is owed, owed by the CD to that person, and his voting share will also be proportionate to that extent. And to the extent of the operational debt, he will be considered as an operational creditor. We also saw assignment of rights. Now, suppose an operational creditor has assigned or legally transferred any operational debt to a financial creditor, that financial creditor, to the extent of the operational debt, will be considered to be as an operation creditor only to the extent of that assignment. So we will just see a question now, whether an operational creditor can legally assign or transfer an operational debt to a financial creditor. Yes, can you just read this and give me some answers? Yeah, I think people have understood. There is one question here where someone has asked, what about an employee who has resigned his final settlement, including PF is pending? He can make a claim and he will get his dues. So the answer is A. Many people have answered. Single trustee, I will just skim through this section. Terms of financial debt, what happens in case there is a single trustee in the case of a consortium agreement. Then what will happen is that trustee will be acting on behalf of that consortium member only to the extent of his voting share. He cannot represent in for more than the voting share of that particular financial creditor, and he can exercise his right to vote to the extent of his voting share with one or more of the creditors jointly or severally. So same person can represent them jointly or severally, and in all these cases the person who's going to be appointed will be only an insolvency professional. Then remuneration payable will be paid as per the terms of the financial debt or as per the cost or as per the agreement, and it will be forming part of the insolvency process cost. Now, assigning of the thing, we already saw this. Now, the COC can ask the insolvency professional, the resolution professional, for any information relating to the corporate debtor at any time during the CIRP, and the RP has to make available all such information within a period of 7 days. So you are mandatorily required to oblige the COC in case of any information requirements. Now, we were talking all this while about financial creditors and who are forming part of COC. Now, suppose there is a company in which CD in which there is no financial creditor, only operation creditors are there. So what happens is, that is where the CD has no financial debt or all the financial creditors are related parties of the CD, the committee shall be set up in accordance with this regulation 6, which will be consisting of such members. 1, they have to identify the 18 largest operation creditors by value. And if number of operation creditors is lesser than 18, then all of them will be included in the COC. 1 representative elected by all workmen other than those who are included here, and 1 representative elected by all employees other than those employees included here. So you will take 18 of the largest operation creditors, 1 representative from workmen and 1 representative from employees. So this is a question. Who constitutes the committee of creditors? Insolvency professional, financial or operation creditors, interim resolution professional, or adjudicating authority? What would be the answer for this? Yeah. No, I've given the wrong answer in this thing. It's the insolvency professional. The committee of creditors only is going to constitute the committee of creditors. I'll just note down that. Yeah. So then voting rights of the COC, which is formed by the operational creditors. The committee shall have voting rights in proportion to the debt due to such creditor or debt represented by such representative to the total debt. What is the proportion? You have to compute towards a total debt. What is a total debt? How do you come up with the amount of total debt? Amount of debt due to the creditors who are the creditors here, 18 largest creditors, or if lesser than 18, then all those creditors. Amount of aggregate debt due to workmen under subregulation 2, and amount of debt in the aggregate debt due to the employees under subregulation 2C. Sorry, this is amount debt due to all the operational creditors. The committee and its members shall have the same rights, powers, duties, and obligations as a committee comprising of financial creditors and its members. Now, Form CA, this is what we saw about authorized representative, where there is a class of creditors, okay? And we said that in the public announcement, the resolution professional has got to, just 1 minute, please. So what I told you, in the public announcement in Form A, there will be a column which will give you a choice of 3 authorized representatives from which the class of creditors will choose the IP. So the IRP shall select the insolvency professional who is the choice of the highest number of financial creditors in the class in Form CA received under Regulation 12, we already saw, to act as the authorized representative of the creditors of the representative class. So in this Regulation 12 2, it shall not be considered, and IRP shall apply to AA. I told you this, once this choice is made, he'll compute who has received the most number of votes, and that person's name will be, referred to the recommended to the adjudicating authority for appointment within 2 days of the verification of the claim. So you have to verify the claims within 7 days, and within 2 days after that, you have to make an application to the AA. Any delay in appointment of the authorized representative for any class of creditor shall not affect any decision taken by the committee. So if you delay this filing also, because the appointment will get ratified only by the AA. If it is not ratified, if not filed, then it will not be confirmed. Then the IRP shall provide the list of the creditors to each class of the respective authorized representative appointed by the AA. So once this AA confirms the appointment of the authorized representative, you have to provide the list of the creditors for each class to that authorized representative, and also an updated list has also got to be provided. But even though the authorized representative has been appointed, this authorized representative is only going to represent these class of creditors, and the authorized representative will have no role in the receipt or verification of the claims of the creditors of the class he represents. Then the IRP or RP will provide electronic means of communication between the authorized representatives and the creditors of the class. It is a responsibility of the IRP or the RP, and voting of a creditor in a class shall be proportional to the financial debt and includes interest at the rate of 8% per annum unless a different rate has been agreed to between the parties. The authorized representative shall circulate the agenda to the creditors in a class and announce the voting window at least 24 hours before. So what happens is, this seems very impractical, but if you see, if you're actually conducting the COC meeting, then all this will become operative. So now it looks like just, some kind of boring compliances which we have to make, but this is all also if we have been involved in some secretarial activities for our corporate clients, we will all understand this little more. So what is the fees for these authorized representatives of creditors in a class? In case the number of creditors is 10 to 100, it's 15,000. 101 to 1,000, it is 20,000, and more than 1,000, it is 25,000. So where a corporate debtor is has only creditors in a class and no other financial creditor is eligible to join the committee will consist of only the authorized representatives. So in my case, I have a case in which the company has got only deposit holders who are represented by a authorized representative. So only this authorized representative is a part of the COC. Those individual members are not, deposit holders are not. So now all this up to IRP, everything has happened. COC has been appointed. Your now we are coming to the place where the IRP's role is going to be finished and the RP takes over. First meeting of the committee of creditors shall be held. This is a question, very important question point also. It shall be held within 7 days of the constitution of the COC. And the COC may in the first meeting by a majority vote of not less than 66% of the voting share of the financial creditors either resolve to appoint the IRP as a resolution professional or replace him. So this is section 22, which I've been talking to for some time now, where you either continue with the IRP or you replace the IRP with the 66% vote. Where the committee resolves to continue with the IRP, this subject to a written consent. Here comes the form AA, which we were talking about then. From the IRP will be taken to communicate its decision to the IRP, the CD, and the adjudicating authority. Now, again, if the COC decides to replace with the IRP with their own resolution professional, this happens nowadays, especially when banks decide to actually appoint a person who is empaneled with them. It shall file an application before the AA for the appointment of the proposed RP along with the written consent in form AA. So now here you understand the difference between the form 2 and the form AA. So AA will again do the due diligence of checking whether there is any disciplinary proceeding, and and they will appoint within the specified timelines. So this is a question. I'll just quickly skip this. I hope you'll be able to go through it. Now, conduct of the resolution process under section 23, subject to this entire resolution process. Now, I told you from the day that you are appointed by the adjudicating authority on acceptance of the application, admitting the application, the entire process is in the hands of the resolution professional with the IRP till IRP is either continued or replaced. So the RP should continue the entire CIRP and manage the operations of the CD during the CIRP period. Okay. After the expiry of the CIRP period, in case something happens that 180 days is not, over and still nothing has happened, the resolution professional shall continue to manage the affairs of the CD after the expiry of the CIRP until an order approving the resolution plan is passed under section 31(1) or appointing a liquidator is passed under section 34 by the adjudicating authority. So the RP will have the same powers and duties as that of an interim resolution professional. And in case of a replacement of the IRP by the RP, the IRP has to hand over the papers. That is normally known. So what are how are the meetings of the COC conducted? Meetings are conducted either in person or electronically. Now, most of them are going electronic. And the RP is responsible to conduct the COC and is subject to the conditions we already saw. Any creditor has a power to appoint an RP other than an IP other than the RP to represent in a meeting of COC, and fees payable to such IP will be borne by such creditor. So what happens for the meetings? RP should give a notice to the members of the COC, including the authorized representative. RP has to give to the members of the suspended board, members of the COC, to the operational creditors or their representative. If the aggregate dues is not less than 10% of the debt, voting share assigned to each creditor, it will be in the manner specified by the board, and the directors, partners, and one representative of operational creditors, they may attend, but they will not have any right to vote in such meeting. And their absence will also not invalidate the proceedings of the meeting. So what are the regulations? So this is what we have to do practically. You do verify the claims, you form the COC, you will file a report certifying the constitution of the committee of creditors to the AA within 2 days of verification of the claims under regulation 12. And the IRP shall hold the first meeting within 7 days of filing of the report under this section. So where the appointment of the RP is delayed, so from the 40th day till the appointment of the resolution professional under section 22, the IRP will be continuing. RP may convene a meeting as per regulation 18. The RP can convene a meeting of the committee as and when he considers. And also, see, the RP can, in case he wants to get the approval of the COC for anything, he can convene a meeting. Or if the COC is going to call for a meeting represented by 33% of the voting shares, the RP has to convene the meeting again. So the notice for these meetings shall not be less than 5 days, and it shall be in writing and sent to the address so provided. But the committee can reduce the period to such a period of not less than 24 hours as it deems fit, but 48 hours if there is any authorized representative, because we saw the authorized representative has to interact with the creditors whom he is representing. Service of the notice is by electronic means, and the email should state the name of the CD, place, etc. There are a lot more details in this regulation. Please go through it. The main thing here is obligation of the RP is satisfied when the email is transmitted. See, you should have the valid email ID or whatever is the email ID which is provided to you by the creditor. If you transmit the email to that particular ID, then your obligation as RP is satisfied. Contents of notice, all of us will know what this is. I'm not going to go through it. Quorum for the meeting is at least 33% of the voting shares. at least 33% of the voting shares of the creditors present either in person or video conferencing or other audio video means, the committee may modify the percentage of voting rights required for quorum for any future meeting. So first meeting would be 33%. Meeting can be will be adjourned to the same place and same time on the next day if quorum is not present. For adjourned meeting, the number of members present are considered to be as quorum, and the RP is responsible for ensuring that the quorum is present, verifying whether the quorum is present throughout the meeting. Then in case of audio-visual meetings, these are the requirements. You can go through it. Conduct of the meeting, RP is chairman and proper records. All these are, we will be familiar with it because we do certain secretarial compliances also. What are the duties of the RP under section 25? This is very important because this is what you will be actually, practicing as an insolvency, as a resolution professional for a CD. Preserve and protect the assets of the CD, including the continued business operations of the corporate debtor. You should understand, when you go to the adjudicating authority, the authority will definitely question you in case you have taken any decisions with the AA fields is not for the benefit of the continuing business of the CD. Sorry. Suppose you decide to, sell any scrap, to actually, make some, instead of going in for interim finance, you decide to sell some scrap to finance the continuing business activities. It is better that you actually take the, approval of the NCLT for this, adjudicating authority for this. You have to take immediate control and custody of all the assets of the CD, including the business records. You have to take all the records. You have to take the custody of the server. If they have any proprietary applications, take the custody of those applications. Then represent and act on behalf of the CD with third parties, exercise rights for the benefit of the CD in judicial, quasi-judicial or arbitration proceedings. Like I told you, I had to go to the registrar of properties. Raise interim finance subject to the approval of the COC. Appoint accountants, legal or other professionals in the manner as specified by the board. Maintain and update. Always your list of claims should be updated. Convene and attend all the meetings of the committee of creditors. Then you have to prepare the IM, that is the information memorandum. This is one section which I spoke of before also. You have to invite prospective lenders, investors, and any other persons to put forward resolution plans. So this is your duty. As per section 25(2)(h), you have to invite prospective lenders for resolution plans. Present all the resolution plans at the meeting of the COC. File application for avoidance of transactions under Chapter 3. This is a very, very, very important duty of the RP. It will also form a part of your timelines also. You have to file the determine the avoidance transactions and then file this application with the NCLT also, because if you don't, it's a very serious non-compliance which is viewed very, very seriously by the board and by the IPA. So you have to file. This will be covered in depth tomorrow by the faculty, and such other actions as may be specified by the board. These rights and duties of authorized representatives, I'll just skip it. I would request you all to go through it. See, this application for avoidance of transactions is not to affect the proceedings section 26. Now, these are two parallel activities. You have to file an application for avoidance, I told you, in under section 25(2)(j) here. Now, this one is covered in depth under Chapter 3, which will come under liquidation. But there are, I'll just give you a brief explanation. There are certain transactions which are called as avoidance transactions, which you determine the determination is done by the RP and it is filed, but it is discussed in depth in after section 34, in the Chapter 3 of this section. There are certain preferential transactions, undervalued transactions, fraudulent transactions, extortionate transactions. These are generally called as the puff transactions. These transactions you have to determine as a resolution professional. You have to determine whether the corporate debtor for who's undergoing the insolvency has actually, done some transactions which are fraudulent, or, they have diverted any funds, or they have paid any extortionate transactions, or they have undervalued some transactions and transferred them. If in those cases you find determined that you have to file an application of this under this section 25(2)(j), and the fact that you have filed this application is not going to affect the proceedings of insolvency in any other way. They are two independent activities. The insolvency proceeding is an independent activity, and this avoidance transaction activity is going to be an independent activity. Now, replacement of the resolution professional, we already saw under section 22. In case the COC is deciding to replace the IRP with any other resolution professional, they can replace, and the meeting should be with the 66% of voting shares, and the COC will forward the name of the insolvency professional, and the same procedure will be followed by the adjudicating authority and by the board. They will verify for the disciplinary proceedings, etc. Now, transfer of debt due to creditors, we've already seen that in case the creditor assigns or transfers debt due to any other person during the insolvency process. Okay, and both the parties, there may be instances where the creditor will decide to transfer the debt due to any other person, and they have to inform the resolution professional or the IRP along with the terms of such assignment or transfer and identity of the assignee or transferee. And the moment this is done, the resolution professional shall notify each participant and the adjudicating authority of any resultant change in the committee within 2 days of such change. Then sale of assets outside the order. This is also, a very important regulation which we should be aware of, because when we are doing the process of insolvency as an insolvency professional, you may be forced in some situations to take a call about selling the assets of the business. See, during liquidation, you can sell the assets, but during CIRP, if you decide to sell the assets, then these are the things which you have to keep in mind. You can sell any unencumbered assets of the CD other than in the ordinary course of business if he is of the opinion that it is necessary for the realization of the value under the facts and circumstances of the case. So there may be some instances when you will be forced to sell the assets. So at that point in time, you need to have you need to be able to substantiate the reason, and one, it should be only unencumbered assets. And see, there will be some more things. It should not exceed 10% of the total claims admitted by the IRP. The book value of all the assets sold during the CIRP period cannot exceed 10% of the total claims admitted by the IRP as per regulation 29. One, it should be unencumbered, and two, it cannot exceed 10% of the claim. And the sale of the assets should be approved by the COC on a vote of 66% of the voting shares. And a bona fide purchaser of the assets sold under this regulation shall have a free and marketable title. Regulation 30 is very important in the practical conduct of the insolvency process. You can take the assistance of local administration by making an application to the adjudicating authority, who will in turn order the local administration in providing you with help in discharging your duties. This has happened to us in a couple of cases, where in my own case, I had to attend the first, when I went to take the control and custody of the assets of the CD. The CD was a chit fund company, and he had sent a message to all the chit fund subscribers saying, there is this madam who's coming from court who's going to repay your money, and around 300 people converged in that place, and we had to take the assistance of the local police to subdue them, because they all became very aggressive, and it got covered in the local TV channels, etc. And in another case where the employees started protesting against the RP in the factory, again protection, and they refused to allow the RP to go inside the plant to take custody of the assets or take whatever information that was needed. Again, RP, we had to approach the bench to get orders to ask the local police station to assist in entering the plant. These are all very dicey situations where, you're tested in many different ways. Withdrawal of application, we already saw. These are the actions for which the COC has to approve. The RP has to take the approval. You can just go through it. This is a list of activities for which RP has to take approval. And all the approvals can happen only with the 66% of the voting shares of the COC. Voting by committee also, please just go through it. I'll just quickly run through. It's maybe another 10 minutes I'll take. I've been talking about the IM and the resolution plan. These are covered in these sections. What exactly is the IM? IM, I told you, is static information pertaining to the corporate data. It is prepared under section 29, and it shall contain information for preparing the resolution plan. See, if you want someone to come in as a resolution applicant and give a resolution plan, he needs to have some data. So that data is provided by the RP in the form of an information memorandum, and it should be furnished to each member of the COC within 2 weeks of his appointment. See, so as an IRP, just see the volume of work that you will have, but not later than 44th day of the insolvency commencement date, whichever is earlier. So the resolution applicant to undertake compliance of law, protect intellectual property of the CD, and not share information to third parties. So when this resolution professional is going to share this information memorandum with the resolution applicant, he has to take an NDA. He has to take a undertaking that they will not share the information. They will protect the intellectual property, or they will comply with the law. And what is the information required in that IM is the financial position, information required by the applicant for the resolution plan, and any other matters. There will be a format. So the contents are given in this regulation 36. You can just go through this contents. You will see it is all very static information, and for us chartered accountants, it's very easy to collate all this information. So this is the regulation 36. Now we'll come to section 29E, which talks about the persons who are not eligible to be a resolution applicant. Now this is a very, very important section, and this was enacted. If you see anything with one A, capital A ahead of it, it means that it is a section which was inserted as a part of refining the code due to the experiences of the stakeholders of this insolvency ecosystem. So to prevent the backdoor entry of the promoters to the company which is undergoing insolvency, this section 29A was introduced. So according to this, the following persons cannot submit a resolution plan if that person is acting jointly or in concert with such person. And friends, let me tell you, this is a huge opportunity for chartered accountants, because there are a number of insolvency professionals who have got who are getting resolution plans, and they have to ensure that they are not persons ineligible to be a resolution applicant. So there is a huge due diligence opportunity here. And like I told you, even if you don't take up work as an insolvency professional, you can take up these due diligence activities, and there are websites which you can go and get the information. Now suppose you will know whether a person is a willful defaulter in accordance with the guidelines of RBI. You can go and get the willful defaulter data from RBI. You will know whether he's an undischarged insolvent, or you will know whether he has any account in which the promoter or somebody who's associated, some related party to the debtor, to the corporate debtor, to the director, to the related parties, all of them is classified as an NPA. Or there is what do you say, he's been convicted of any offense punishable with imprisonment. You have to verify all this. You're disqualified to act as a director under Companies Act. So go to the MCA website and verify. Prohibited by SEBI from trading in securities and accessing the markets. So all these due diligences, it provides a huge opportunity for us as chartered accountants. It is currently, this is a very, very new emerging area of practice for chartered chartered accountants. He has been a promoter or a management or in the management or control of a CD in which a preferential transaction. I spoke to you about the PUF transactions, no, under section 25(2)(I), where you have to report on avoidance of transactions. So this preferential transactions, undervalued, extortionate or fraudulent has taken place, and he is a promoter in that. He is not eligible. Then he has executed a guarantee in favor of a creditor in respect of a CD against which an application of insolvency resolution is being made. Is subject to any disability corresponding to clauses under any law or a jurisdiction outside India, or has a connected person not eligible under A to I. So you just have to go through the entire thing. If you look at it from the point of view of having it as an entire new vertical within your organization, understanding of section 29A will become very, very easy. The main reason why this particular section was enacted was to prevent the backdoor entry of the promoters of the company. So just go through this fully, because paucity of time, I'm not going through it fully. So this IM has been given to the resolution applicant, and the resolution applicant is giving a resolution plan. It will be submitted along with an affidavit saying that he is eligible under section 29A to the resolution professional, and it is prepared on the basis of the information memorandum. So the resolution professional will examine all the resolution plans which are received by him and confirm. Okay, and he will confirm that it provides for the resolution plan. This is very important again. Like I told you, the insolvency professional cost here, the payment of the insolvency resolution professional cost should be made, provided for in the resolution plan in a manner specified by the board in priority of the payment of other debts of the CD. So again, the costs during the CIRP, your cost as an insolvency professional, everything gets covered here. Provide for the payment of the debts of the operation creditors in such manner as may be specified by the board, which shall not be less than the amount to be paid under section 53, which is the waterfall section. Provides for the management of the affairs after the approval. So there's no point in a company coming up with the resolution plan if there is no adequate way in which the affairs of the CD are going to be managed. Implementation and supervision of the resolution plan. Normally, once a resolution plan is accepted and done, there should also be provision for the monitoring of that particular resolution plan after it is taken over. It should not contravene the provisions of any law, conforms to other requirements, etc. The resolution professional will present to the COC for the approval of all the resolution plans which conforms to the conditions. Once the COC is going to approve it with a vote of not less than 66%, it will be submitted to the board. Just go through these other clauses. It will submit it to the board, and the board will in turn see the RP will submit the resolution plan as approved by the COC to the adjudicating authority. So once the plan is approved, it shall be binding on the CD and its employees, members, creditors, guarantors, and stakeholders. And the adjudicating authority shall, before passing an order for approval of the resolution plan, satisfy that the resolution plan has provisions for effective implementation. We have to prove all this to the adjudicating authority in the document which we are submitting. Once this is approved, the moratorium order will cease. So this resolution plan is approved, moratorium order will cease, and all records of the resolution plan will be forwarded to the board. And now again, you have here, when you have this resolution plan, what you should understand is you're filing it with the adjudicating authority. And I told you, you have to see the interplay of the various acts. If it is a listed company, SEBI LODR comes into place. And so what happens now, there is a requirement that once this oral order is given by the adjudicating authority of approving the resolution plan, within 30 minutes, this oral order has got to be communicated to SEBI by the RP. It has to be communicated. These are all requirements which is to be done by the RP. And later on, the RP has also got to file all the disclosures with SEBI, the same disclosures which he will be filing with the IBBI or with the IPA. So within a period of 1 year of approval of the resolution plan, the resolution plan has got to be implemented. and provided where it provides for a combination and all that, just go through it. What is the format of the appeal? In case there is going to be an appeal against a resolution plan, it can be done in the grounds laid under the respective sections. So what can happen with this resolution plan? Non-submission within the due date, extension will be allowed. Non-submission within the due date, you have to, when I say extension is allowed, it means you're going to apply to the adjudicating authority after getting approval from the COC for an extension. We saw that in the beginning itself. Non-submission without due date, no extension is given by the adjudicating authority and liquidation will be ordered. Submission of the resolution plan, then after going through the COC, approval and order of the resolution plan by the NCLT, and the order is also given by the NCLT accepting it, and the further processes will take place. If the resolution plan is submitted and it is rejected by the NCLT, then liquidation will be ordered. These are the regulations. So, as per that section 25(2)(j), we saw that it is a duty of the RP to call for resolution plans. So they have to do, the RP has to do it in Form G, where he will call for expression of interest not later than the 75th day from the insolvency commencement date, and people can submit the resolution plan. It should be published in Form G, again in one English and one regional newspaper, on the website of the CD, on the website, if any designated by the board. It is you just have to submit it now, or in any other manner as decided by the COC. So just go through this question. Contents of Form G and invitation is details of the contents is also given in the regulation. You can just go through that. Resolution plan, again, preparation of resolution plan is another very interesting area of practice for chartered accountants, because all of us are very familiar with financials and we know how to prepare these data-based information for financial institutions. Resolution plan is also something similar to that, which if you prepare in accordance with the regulations 36 and 37 and all that, you will find it extremely a very nice lucrative area of practice for chartered accountants. What are the mandatory contents? You can see. The only thing is the resolution plan should demonstrate it is feasible and viable. It has provisions for effective implementation, approvals required for timeline, and implementation. These are all very, very important points which the resolution plan should demonstrate. Just go through this. Preservation of records, you have to preserve it in accordance with the retention schedule, which is there in the regulations with the IPA, which will be covered on another day. Now, extension, we already saw under section 12, you can apply for extension to the adjudicating authority after getting the approval from the COC, and they will give you one extension for 90 days. Now, this is another section. This is again based on certain jurisprudence and other experiences which have been happening. Liability of the corporate debtor for an offense committed prior to the commencement of the CIRP shall cease, and the CD shall not be prosecuted for such an offense from the date the resolution plan has been approved by the adjudicating authority under section 31. And if the resolution plan results in the change of the management or control of the CD to a person who was not. See, what happened was, once the resolution plan was accepted and the CD was taken over and there was a change in the management, the departments, various departments, GST, income tax, etc., they started sending notices to the person who has taken over the company. So in those cases, 32A was introduced to say that this liability for offenses prior to the CIRP need not be undertaken by the resolution applicant who has taken over the company. So this is the gist of section 32A. I'm sorry, I'm exceeding the time. So just please go through this 32A. I've given it in depth here. And the last slide is initiation of liquidation under section 33. Before the expiry of the insolvency resolution period or the maximum period permitted for completion of CIRP, no resolution plan is received. So the RP does his duty in all ways, but no and he calls for he issues the RFRP, calls for expression of interest, etc. But no plan is received, or the resolution plan is rejected for non-compliance of requirements, then the AA will initiate the AA will order for liquidation. Now the RP communicates to the COC. See what happens in these two instances. Again, RP only will make the application, but the COC decides there is no point in continuing this particular CD and business because nothing is going to happen. RP will communicate to the AA about the COC decision, which should never be less than 66% of the voting share, to decide to liquidate the CD, or where the approved resolution plan is contravened by the concerned CD or any person other than the CD whose interests are prejudicially affected by the contravention, they may also make an application to the CD for a liquidation order. So what happens is the CD is moved into liquidation, which is now chapter 3 of this part 2 of the code. It will be covered tomorrow. So I have completed the CIRP rules, regulations, and the code. I'll just see if there are any questions. So there is a question which says, any link available for the latest code and regulations? Yeah, you can go through the latest code and regulations, but I would advise you to go through the code as on 31/12/2020, because that is what is there in your syllabus for examination. I will be sharing the PPT soon. The organizers will, SIRC, they will share it with you soon. They'll send you an email and you can get it. Yeah. Okay, so thanks everyone for. See, previous exam question papers are not available for this particular exam. You have to go through the model question papers, which is there in the website of IBBI, IIIP of ICAI, IIIP of ICAI, and the ICMA. And there are certain other websites also now which are having these question papers. You can just go through those, but there are no previous question papers available, because as I told you, you can just take only one question paper. People who write the exams and clear come and share their questions, and we generally try and collate them. So probably if you have any friends who have cleared, you can ask them for questions, and we also have some questions which we share. So there is no previous year question paper as such which is available. The PPT I will definitely be sharing with you soon. Yeah. Okay, so this is as far as CIRP is concerned. We will meet again tomorrow at the same time for liquidation, which is chapter 2. Okay, friends, thank you very much. I'm sorry I have exceeded the time, but I tried to make it as fast as possible. But the chapter itself is very huge. All of them, all the chapters are very huge, and we will try to complete as much as possible. Thank you very much.